Watch, plus the interviews you don't want to miss. Watch Caroline Hyde and Ed Ludlow on Bloomberg Technology, the only daily business show dedicated to tech, right in the middle of the trading action, every weekday, only on Bloomberg Television. Context changes everything.
The inflation, Jeannie, I would say, has not been completely slayed.
It's the data that's driving the market's reassessment of how many rate cuts need to be done this year.
There's no doubt the Fed will go in September.
The idea of getting an extra even 30 to 40 basis points priced in, I think that's really a tough thing to ask for.
Those who are thinking that this rate cut is going to change Main Street are overestimating the power of 50 basis points on the street.
This is Bloomberg Surveillance with Jonathan Ferro, Lisa Abramowitz, and Anne-Marie Hordern.
Live from New York City this morning. Good morning, good morning. The second hour of Bloomberg Surveillance begins right now with equity futures on the S&P just about unchanged, on the Nasdaq just about positive after a stellar run in this equity market. 6 days of gains on Nvidia. That stock is up by more than 24% over that period. 8 days of gains on the S&P 500. That index is up by almost 8% over that period. And Lisa, the equal weight coming into Tuesday at all-time highs on the S&P 500.
Which highlights how this has been a broad-based rally, which is what a lot of people wanted to see to really confirm the health of the stock market and the health of the potential rally that people are seeing. Key question here is, can one jobs report torpedo that? Or is this basically going to be an era in which rates are going to come down into strength, which is essentially what this market is betting on?
We keep going back to the same calendar. September 6th for payrolls, 11th for CPI, 18th for the Federal Reserve, and Anne-Marie, a lot of politics in between.
A lot of politics in between. Lisa will be at Jackson Hole. I'm going to be going to the DNC. And for this market, Jonathan, what are they going to be focusing on? They're very data dependent, but every day we still get policy proposals. And then the Committee for Fiscal Responsibility comes out and says, this is how much that will add to the fiscal deficit. And how much at some point is the bond market, to Lisa's point, going to be pushing back on that?
Laurie Calvasino of RBC was on the program yesterday, and we asked her, is there anything to critique here? And what did she say? No.
Yeah.
Basically, no. There's nothing to critique here. It's very hard to analyze something when you don't have any real details.
This is the problem, is that, and we keep hearing rhetoric and vibes, you know, and this is sort of the moment that we're in, and I'm deeply frustrated. I'm not going to hide it. I know everybody thinks I'm hiding it. I'm not. I mean, it's frustrating because you want to get a sense of what we can actually work with other than just sort of gossip and political kind of noise, and it's not a lot right now, and so you do wonder at what point you can take them seriously and what point you can't. Right now, light on policy, we're hearing that pretty broad base, so you have to go with the economic data, and the economic data has been pretty good, and what you hear from earnings is a consumer that's not falling off a cliff. We'll get the latest read today with Target, which maybe will give some of the same flavor as Walmart. I think that'll be important, but really the big event is next month when we get jobs and CPI, and then the Fed potentially cutting by 25 basis points.
Two things. One, I don't think anyone thinks you're doing a good job of hiding it. Two, I'll turn to some of the earnings as well. Lowe's this morning, kind of guidance on soft DIY spending, the housing market. Saw a similar thing on Home Depot. Difficult to get a read on the US consumer when you see retail sales doing so well. You get all these conflicting reports from consumer-facing companies over the last few months.
It's difficult unless you drill in and look at these specific industries that are really moving and not in sync. The housing industry has consistently been sort of the outlier in consumer spending. And we heard that from Drew Redding, that why do people spend on new decks? They do because they buy a new home and then they want to build a new deck. I'm just using this as an example.
Sure, of course, yeah.
But
you didn't buy a home or build
a new deck. But the issue here is, you know, that's when you have those do-it-yourself projects. If you don't have that churn, which you basically don't because you've got a frozen housing market, that's why you start to get lower earnings. And so that's the reason why it's sort of idiosyncratic, but I hate using that word. So here we are.
I think Joe Quinlan did a really good job talking about the bifurcated consumer. Top 10%, he says, of U.S. households are responsible for 21% of total U.S. consumption, more than the bottom 30% of households combined. It's two different economies depending on where you are on the income scale.
Lows right now down by about 1/3 of 1%. The broader story, if you are just joining us, equity futures positive here by 1/10 of 1% on the S&P 500. A little bit of a lift. We've given you the stat a few times already this morning. It's worth repeating. 8-day winning streak on the S&P 500, longest of the year so far. If you make it day 9, it's the longest in 20 years. years, which is absolutely phenomenal. And it's not been a small rally either over the last 8 days. We're talking about a rally of almost 8 percentage points on the S&P 500. In the bond market, just about unchanged on a 10-year, 387.68, and the euro going absolutely nowhere, just short of 111 at 110.82. Your lineup this hour looks like this, with Bob Michael of JP Morgan Asset Management on his outlook for the Federal Reserve, Jeanette Lowe of Strategas as Biden passes the torch to Harris, and Mike Powell, the economic advisor to Harris, on her policy platform. We begin with our top story, the S&P 500 notching its longest winning streak since November as traders weigh the Fed's path ahead. Bob Michael of JP Morgan Asset Management laying out his timeline, writing the following: we expect 25 basis point rate cuts at each FOMC meeting in 2024, and then quarterly in 25. A consistent rate cutting cycle is the essential ingredient in our forecast of a soft landing. Bob joins us now for more. Bob, good morning.
Good morning.
Everything and nothing has changed since we last spoke, because I think we last spoke on Federal Reserve decision day 2 days before that scary jobs report, which we've all moved on from. What's your take on where things have been over the last couple of weeks?
But so much has changed. We were sitting here on Fed Day, and we were saying, just get through this meeting. You have a free intermeeting meeting with Jackson Hole. You can wait and watch the data and have a do-over before the September meeting. And here we are at Jackson Hole, and they should take the do-over. They looked at the employment data, it softened up. You look at the inflation data, it's come into where they would like to see it. I would use this Jackson Hole conference to set the time frame and expectations for the market. We're going to cut rates. This is the shape it's going to take. These are the things we're looking at. There's a gift. On the other hand, I think they should just do nothing. All the data has come their way. They've guided us to a feathery soft landing. Just don't mess it up. Start cutting rates in September, and let's get on with it.
You're talking about what's needed, the essential ingredient for that feathery soft landing. And it's quite a course still. You're looking for 3 cuts this year at 25 basis points, and then again through 2025. Just a consistent rate cutting cycle you've described. Why is that the essential ingredient? Where do you think neutral is? What is restrictive? What's accommodative? What do we need for this economy that we have?
Because inflation has come from here down to here, and it's still on that downward trajectory. If you look at the 3-month annualized rate of core CPI and the expectation on where core PCE is going to be, they're sub 2%. So inflation has come down a lot. You're hearing from a lot of the retail market as they're announcing earnings. There's some consumer pushback on pricing. They're choosier about what they're spending on, and that's hitting the top line. So inflation is coming down. You look at the labor market, slack has been created. We've got unemployment up at 4.3%. We're not at 3.4%. You look at wages. Wages dropped from 3.9% year over year to 3.6% year over year. If you leave restrictive rates at the level they're at currently, then that worsens the labor market. And then you've got not a problem with inflation, but the pace of disinflation. You've got to start relieving the pressure on businesses and households.
Why do you think that we haven't seen a more aggressive slowdown then, if this really is because of the rates? And I ask this because I was looking at data compiled by Evercore ISI's Julian Emmanuel showing that you're seeing the S&P 500 second quarter year-over-year earnings per share growth at 10%. You're seeing profit margins that are expanding. How does this scream a market that's on the brink of falling off if you don't get those rate cuts that are pretty significant?
Well, there's still a lot of money sloshing around in the system. What I'm talking about is slowing down to trend and then bringing policy in line with stabilizing growth and inflation around trend. What Julian's talking about is, hey, there's still a lot of economic activity out there. He's right. I was listening to Mary Powell earlier from Sunrun. She's talking about everyone accessing the wonderfully named Inflation Reduction Act to spend and invest in solar. There's all that money still in the system. It is creating an underlying level of economic activity. It's probably one of the things you need to ensure that a soft landing actually occurs and you don't have recession.
So you said that Jay Powell should both do nothing, but also should sort of telegraph some kind of path ahead in the Jackson Hole
That's what I
speech
want.
today.
I want a very clear roadmap.
All right, so you want a clear roadmap, but you don't expect him to do it because there's absolutely no advantage to him doing that.
None.
Okay, so what do you think actually could be the roadmap beyond this year that you could give with any clarity, given the fact that you're talking about some of that income that people received that has helped fuel some of the price inflation that could reprise itself next year, depending on some of the policies that may or may not be fact that we're hearing from both candidates?
Well, that keeps a $27 trillion economy operating at $27 trillion. That's okay, but how do you start building some real growth upon that? You need the housing market to reignite again. Clearly, there's demand for housing. There's a 3 to 4 million unit housing shortage in the US. You bring down rates, it pulls down mortgage rates, that suddenly makes housing affordable again, and you get the first-time buyers to step in there, and all the things that you talk about, building decks and stuff like that, begins to happen. So it's one of the things that bringing rates down actually does. It's not that a quarter 50 basis point cut doesn't do anything. It actually does a lot. A lot of businesses and households fund themselves off of the floating rate market.
Well, when it comes to housing, what about $25,000 for new homeowners? Also in what you love to hear this week, but are unlikely, is a detailed economic plan from Kamala Harris. What do you make of what we heard so far?
I think the DNC is in the same position as the Fed. The data has come their way in a big way, and they're well ahead in the polls. So just get through this conference with a lot of platitudes and euphoria and take that momentum. I don't think we're going to see a detailed economic agenda. I think 25,000 housing credit, it's a great idea. Who ends up paying that bill? Does it just get sent to the Treasury and there's more funding that comes out? Probably. Will it ever get through a split Congress? Maybe not.
We don't have detailed proposals, but she is basically running on the Biden platform, and Trump was already president before. They are incumbents. How do you think about 2025 when you think about these two individuals potentially being in the White House?
I think we've gone through periods where the administration has had very clear views on what they want to do, but if you have a split Congress, they've got a very different mindset, and it's very difficult to get legislation through. So I think the real focus should be looking at Congress, looking at the House, looking at the Senate, and seeing how those elections go.
Let's work through your calls just to wrap it up. Long duration, curve steepness, stay overweight credit. I just want to pick up on the duration point. Explored this with Kelsey Barrow yesterday. I want an idea from you on where you think yields are heading. This time next year, what kind of yield curve are we going to be looking at? What kind of numbers are along the bottom? What are you looking for?
So intuitively, I want to say where yields are today, the Fed has to bring rates down to 3.5%. That's 200 basis points. That's a lot. That's pretty normal in a cutting cycle, and cutting cycles are usually coincident with recession. We don't see a recession, but a 3.5% Fed funds rate is 1.5 real. That seems to be a fair level, and the curve's priced for that. Then I look at all the money still sitting in cash that's out there. I think of every single client conversation I have every day. It doesn't matter if it's institutional or it's in a wealth management platform. It doesn't matter if it's domestic or international. Everyone is looking for a way to get into the bond market and frustrated beyond belief because they never got to buy at yields of 5 to 6%. And once rates start coming down and money market fund returns start to drift lower, that money will come in. And that money's not thinking about, oh, I want to buy the 10-year, I want to put on a 2-10 steepener or flattener. The market's thinking, put me in an aggregate bond fund, put me in a general muni bond fund. Do you have an income fund? Okay, put me in there. What kind of ETF do you have? Do you have a Core Plus ETF? Put me in there. And that money comes into the market in a big way. And asset managers may sit there and say, oh, you know, yields are a little rich. I'm going to be underweight duration by a quarter of a year. So they're still buying 6 years of duration. They're underweight by a quarter of a year, and that money's coming in. So I worry yields could get down to 3% or even lower.
3.0?
Yep, 3.0.
On 10s?
On 10s.
Is that process started?
It it's started in just the tiniest drip of ways, which I've always turned around and said, look where yields are. And everyone's telling you, oh, we don't like them here. We don't like them here. Look how far through the Fed funds rate are. Look how cozy it is at 5.5% in cash. Then who the heck is buying to take the entire yield curve down through 4%? There's a lot of buying of money that's leaking in, but it has not come in earnest. That process hasn't started.
Bob, this was fun. Thank you, sir. It's good to catch up. Appreciate it. Bob Michael there of JP Morgan Asset Management with some very interesting calls on what isn't happening and will happen in fixed income over the next year or so. Let's give an update on stories elsewhere this morning with your Bloomberg Brief. Here's Danny Berger. Hey, Danny.
Hey, John. Eli Lilly Zepbound cut the risk of diabetes in patients taking the weight loss shot by 94%. In a statement, Lilly outlined the results of its 3-year study where more than 1,000 patients with obesity and pre-diabetes received either Zepbound or a placebo. Those on the highest 15 milligram weekly dose also lost about 23% of their body weight. Lilly said detailed results will be presented at an upcoming medical conference. Alaska Air Group and Hawaiian Holdings are now closer to finalizing their $1.9 billion merger. The waiting period for the Justice Department's antitrust review has now expired. The deal is still subject, though, to approval from the Department of Transportation, which can impose conditions to ensure the deal serves consumers. And Donald Trump is downplaying criticism that he has undercut the Fed's autonomy. In an interview with Bloomberg News yesterday, the former president said he thinks it's fine for a president to talk, and it doesn't mean they have to listen. Trump also called Harris's plan to offer first-time homebuyers $25,000 a, quote, big mistake. But then he went on to say that he also might offer help to struggling prospective homebuyers. And that's your brief, John.
Big mistake. Might do the same thing. Got it. Danny, thank you. Up next on the program, Biden passing the torch to Harris.
Because of you, we've had one of the most extraordinary 4 years of progress ever, period. When I say we, I mean Kamala and me.
That conversation up next, live from New York this morning. Good morning.
Is on. Everything you need to get the edge at the end of the market day.
Big tech earnings kick off later this afternoon.
Gilead is coming out right now.
We have take two numbers. Back to the markets, right? Our bread and butter.
NVIDIA is one of the best stories in the tech space.
That actually matters a whole lot more.
It might shock some of your viewers.
You're watching The Close.
Get ahead of tomorrow's trading with The Close. Weekdays on Bloomberg. Context changes everything.
Live from New York, welcome to the program. Equities right now just about positive by 1/10% on the S&P 500, already on the longest daily winning streak of the year so far. Under surveillance this morning, Biden passing the torch to Harris.
Because of you, we've had one of the most extraordinary 4 years of progress ever, period. When I say we, I mean Kamala and me. She's tough, she's experienced, and she has enormous integrity. I need you to win back the House of Representatives. And above all, we need you to beat Donald Trump.
Here's the latest. The DNC kicking off its second day with Barack Obama headlining the slate of speakers later on tonight. Vice President Harris and Governor Walz stepping away from the convention to travel to Milwaukee for a rally as they push forward their economic agenda. Jeanette Lowe of Strategas writing the following. Her policies are generally in line with those of Biden, but lean a bit more progressive. This does allow there to be more of a policy debate between Harris and Trump, but we also have the two primary candidates now proposing price controls or greater tariffs. Jeanette joins us now for more. Jeanette, let's start by talking about the distance between not just Harris and Trump, but Harris and Biden, and then we can try and get into some details, which I know is a bit of a struggle at the moment. As you join us from the DNC, and as you hear the words come from the sitting president, when I say we, I mean Kamala and me, does that help her or hurt her?
Well, I think one of the biggest things we saw last night was their unity within the party at the convention. You know, Biden got, not probably the night that he wanted at the convention, but he definitely kind of got the send-off. He got the big cheers and raucous applause and the thank yous and all of that. But so it shows definitely the unity within the party as it moves from Biden to Harris. I think also you had the Democrats approve their policy proposals. You kind of saw that it was basically the Biden plan. Harris is going to start to make some changes to her policies to make them a little bit more different from what we had under the Biden administration. But in general, you're seeing a continuation of what his policy proposals were, and then she's just trying to take some of those a little bit further. So there is not a lot of daylight between what you would have had for the policies under Biden or the policies under Harris.
I'd love to talk about potentially one area where we can see Kamala Harris really debating what to do, and that's at the FTC. Some of the big donors that support Kamala Harris want her to ditch Lena Khan. But of course, that was a Biden pick, and the progressives want to keep her. Do you have any understanding what an FTC could look like under Kamala Harris as president?
Well, I think that, so if you look at just kind of her background as a prosecutor, she's definitely kind of looking to still do some antitrust pieces. But anyone who does come in may want to actually have their own people in the various agencies. And that also might just even depend on, how she feels that Lena Khan is currently working in that agency and what she wants to do moving forward. So I don't have a good idea yet if she might make a change at the top there. But I think that's something that Harris is still going to be quite focused on. This kind of goes back to the price gouging proposal that she made on Friday. So that's something that she's still going to be looking to doing.
When it comes to the price gouging proposal, this is something that the Republicans have really just taken a hold of to criticize Kamala Harris. You're at the DNC. What are Democrats saying? Because I've heard to Democrat-leaning economists who say, we hope that this is just rhetoric and not actually reality. I'm thinking of Jason Furman. What are you actually hearing at the DNC when it comes to this? Do they feel like they fell short on proposing this idea because of the criticism it's gotten, even within their own party?
Yeah, I think the biggest thing is that the Democrats are trying to focus on affordability issues. This has been an election about inflation for most of this cycle, and so there still know that there's voters out there who are concerned about the affordability issue. They're concerned about the fact that Trump does poll better on the inflation and economy, so they're trying to create proposals for that. You do have some Democrats who are saying this is more about consumer protection, this is just more about antitrust, making sure there's not large mergers within the food industry. So I think some people are kind of walking it back a little bit, and some people are saying it's not that big of a deal. But I think obviously the devil's in the details if it actually comes to pass. But I think this is just one of those proposals that's been put out there to be standing for something at this time.
I think it's worth repeating, Jeanette, just to explore this a little bit further. What's the difference between what you think they're proposing and what we already have?
Right, and I think that one of the biggest things too, when you're seeing things with Biden and Harris. So for instance, they both had a housing down payment assistance. Harris went further. She went from $10,000 to $25,000. Well, a lot of those things were difficult to get done even when Biden was in office and we had Democratic control in the House and Senate. So what is that control going to look like in 2025? That's going to be really important for what Harris can get done. Obviously, there are things that you can do at the executive level that you would have the ability to do without Congress, but Congress is going to be really important if you want to do things like childcare or paid family leave or the alike, which I think is where Harris is really much more focused. I feel like that's more of like her bread and butter issues that she really wants to move forward for this agenda.
Jeanette, just to get to Congress, to finish there, what's happening down ballot? Do you see the same momentum there as you do at the top of the ticket?
Yeah, so I mean, I think this is one of the biggest things that people are watching is whether or not Harris is going to really provide some good momentum for down ballot races, particularly in the House. That's where Democrats really do have an opportunity to win back the chamber. They only need a net 4 seats to do so, and they're looking at, what are their fundraising numbers? They're seeing support. You're starting to see voters who were less enthusiastic about a Biden ticket being more enthusiastic with Harris. They're coming home. They're less likely to focus on not voting or voting for a third party. You're seeing increases with African-American voters, Latino voters, young voters. That's important. And so that momentum can help the Democrats in races where there aren't even swing states for the presidential race, states like California and New York. That's where Democrats have an opportunity to take back the House. Of course, it still might be a very, very slim margin. Even in 2025, we could still have just a small margin there. So it's still going to be a very tight Congress, and that's going to have an impact for what these policies can be by the next president.
Jeanette, appreciate the update, and thank you for making it to the airport on time and getting to the DNC in Chicago. Some of our colleagues struggle to do the same thing. Jeanette Lowe, yes.
Really? Shots like I control the weather.
Just throwing it out there. Jeanette can't control the weather either. And
maybe she
drove.
Chicago.
She could have driven.
12, 13-hour drive. It's
maybe
tough.
She was that dedicated to the cause.
Really?
She drove.
So you're gonna put.
I'd like to see you drive to your next big field trip.
I wouldn't be driving.
Exactly.
I don't think anyone wants me driving anywhere.
Doesn't have a license.
No one wants to see that happen either. Coming up on the program, the biggest US port seeing a wave of imports rivaling pandemic levels. Some stellar numbers, just absolutely phenomenal, coming out of the West Coast and elsewhere. We'll catch up with Lee Klasko of Bloomberg Intelligence next on the program from New York City. This is Bloomberg.
Welcome to the world of decentralized finance.
We thought we'd take a look at Bitcoin versus the S&P 500.
Bloomberg's covering all things crypto, the people.
The tectonic shift emanating from Washington.
It's really a tale of two cities in crypto.
Crypto shouldn't be partisan.
The transactions.
Really a record-breaking moment.
Crypto VC is back.
And the technology.
It's really the beginning of a global on-chain economy.
And if America doesn't embrace it, we're going to be left behind.
Bloomberg Crypto, only on Bloomberg.
Good morning. This is Bloomberg Surveillance.
Welcome back to the opening trade.
This is Bloomberg Technology.
This is the Asia Trade.
You're watching The Close.
Welcome to Balance of Power.
This is Bloomberg.
Morning, this is Bloomberg Daybreak Europe. I'm Tom McKenzie in London. These are the stories that set your agenda.
Taking you from the U.S. market's close to the overnight session in Asia. We'll walk you through what you need to know to kickstart the European trading day. Live from our European headquarters, we bring you the day's top market-moving stories, unmatched expert analysis, and on-the-ground reporting from across the continent. Tune in every weekday at 6 a.m. London time, only on Bloomberg Television.
An 8-day rally on the S&P 500, taking gains towards almost 8 percentage points over that period, and the bullishness continues. This from Julian Emanuel of Evercore. Lisa mentioned him earlier. Strong earnings, a Fed set to cut, and macro saying prospective soft landing. All of that skews the S&P 500 to 6,000 by year end. I mentioned this quote from Scott Rubner of Goldman a little bit earlier this morning. The pain trade for equities is higher. Lisa, the bar for being bearish at the beach into a Labor Day barbecue party is high.
Especially because the economic data is cooperating and you've got this earnings. And, you know, we had a dip. It lasted about a day and people are aggressively buying it. It was sort of this feeling that maybe things were getting washed out, some of the imbalances in markets. Not fully, but enough for people to get really excited. Key question to me is, can the equal weight S&P continue to outperform the index level of market cap? Because that indicates some of the healthy broadening out that so many people have been looking for.
Equal weight S&P at an all-time high coming into Tuesday. Let's turn the page, switch up the board and get to the bond market and talk about a range-bound bond market, which is music to the ears of a lot of people in equities who have seen this viciously go one way to the next. The 2-year, about 4.05%, down about a basis point this morning, but this is basically where we've been anchored now from point to point over the last week or so, just in and around 4%. This came from Ian Lingen yesterday of BMO. I think it's important to reflect on some of the Fed speak we've had over the last couple of days. The fact that someone as hawkish as Kashkari is discussing cuts in less than a month implies a 25 basis point reduction in September 18th would be a unanimous decision. The more relevant question is whether a simple majority would endorse a supersized 50 basis point move. So I guess we've got to ask, how important is unanimity to Chairman Powell on September 18th?
So far, it's been very important to him, right? This has been something that he's been trying to get, and we've seen a lot of pushing and pulling to try to wrangle people together. One reason why people are looking at the minutes tomorrow is to see how seriously they discussed a 50 basis point rate cut at the September 18th meeting. Bigger question is, why should Jay Powell do anything other than just echo the likes of Neil Kashkari, of Austin Goolsbee, of the Hawks and the Doves that are all lining up behind the same kind of sentiment? Blake Gwynn over at RBC Capital Markets put this out. Jackson Hole, why be anything but boring? Well, I could tell you that maybe if you canoe and talk about things, you'll be less than boring. But he says Powell has nothing to gain by micromanaging expectations 2 weeks out from a crucial NFP print. This is really the key. Is the 25 or 50 basis point debate really going to hinge on what we get on September 6th?
Yeah, I don't think this has to be too dramatic. Just talk about progress, where we were, where we are. Talk a little bit more about risk management. You know, that the risk management story is a much bigger story now compared to where it was 2 years ago. We've got super low unemployment and super high inflation. Going back to, what was it, August of 22, the pain speech, the 8-minute pain speech you talked about yesterday, different place now. So we can start to think about reducing interest rates to protect and insulate ourselves from further weakness down the road.
If you want to understand the drama of a Jackson Hole speech, it's just whether Jonathan Ferro is going. You're not going this year. We will be there. I will be there with Tom. We will be boating and hiking together, and we'll also be talking to some Fed officials. Not much by way of fireworks is expected, but I think that it's going to be interesting to hear on a longer-term trajectory what they plan in terms of the range of inflation and just how they view the changing role of Fed policy. This is my pitch, this sort of question about whether they are preemptive with their rate cuts.
There's a line I like from the Federal Reserve, and it goes something like this: an ounce of protection is worth a pound of cure. And I just wonder if the same applies at this Jackson Hole meeting, where they sit around and think about the prospect of further weakness down the road and getting ahead of some of it.
What happened to the whole idea of a higher neutral rate, of the whole idea that we were talking about 2 months ago about inflation reaccelerating. Even, as Bob Michael talks, the delta between, this rush of cash from money markets into the rest of the fixed income market, from some of these programs, these incentive programs that we're hearing about coming to the fore and being inflationary and tariffs and all the like. I mean, talk about whipsaw, but that's not where we are right now for the narrative.
Let's see if we have that discussion later on this week. You can lead that discussion.
Thank you.
In Jackson Hole, Wyoming, alongside TK. Let's turn to dollar yen. Dollar yen right now, 146.46. We're negative by about 0.1%. That is just a touch of yen strength. It was a different story earlier on in the session. The higher the session was actually 147.35. And then the BOJ released a pair of research papers highlighting the persistence of inflationary pressure in the economy, and a lot of people started to read between the lines, Lisa, about what this means for policy further down the road.
So the bigger question, I guess, is, does this just sort of indicate how much the carry trade is over for Japan and sort of shorting the yen, given the fact that every tea leaf really highlights just how far the Bank of Japan has gone from this era of do nothing and keep rates extremely low? People are going to view this, even though there is that disclaimer that you put out there, these views are independent of the researchers and not representative of the Bank of Japan. Still, the fact that they talk about price pressures and wage appreciation was enough to cause yet the next leg of a rally in the yen.
Bit more yen strength for you, 146.48. Under surveillance this morning, just to get you up to speed on some stories elsewhere, Alaska Air and Hawaiian moving closer to finalizing a $1.9 billion merger after the Justice Department declined to challenge it. The airlines still need approval from the Department of Transportation, which has to determine that the acquisition, Anne-Marie, is in the public interest.
This is big and notable because this is probably the biggest hurdle if you want to have a merger to be able to go through. If you're JetBlue and Spirit waking up this morning, you're saying, hey, how are they able to do this? Part of it is because they didn't share as many of the same routes, and they think that actually now this means more competition, especially if you're a consumer in Hawaii and want to get to mainland United States. So that's one of the reasons why. And also the fact that JetBlue versus and Spirit, the concern was that JetBlue would not keep that pricing that Spirit had for that low-income individual. But this is a big deal because we haven't seen much M&A activity given what we've seen from this DOJ and FTC.
Do you sense this is an exception rather than the rule right now? I'm thinking more of Kroger and what might not happen with Albertsons as well, particularly after what we've heard from the Harris administration, or rather the prospective Harris administration and their proposals coming out of the campaign.
Although Kroger is now saying that actually they have a plan that this would cut grocery prices. So maybe that as they're under this antitrust review, maybe that will help them. But this does feel like an exception, which is why I keep comparing it to what happened with JetBlue and Spirit. This seems like an exception because of the differences in both of these two combining forces.
And also, I mean, not to be cynical, but you could say that if someone's going on vacation to Alaska or Hawaii, they want their vacation to be a decent price and they can go on, and it's not sort of the staple that is going for groceries, so that if it, ends up getting jacked up a little bit, that they can still choose to go on that vacation or not, versus going to a grocery store and, buying oranges.
Got it. You think people should sacrifice their trip to Hawaii?
I don't think so.
I'm just trying to read between the lines here.
But I think that there's sort of a less maybe imminent feeling that this is going to affect consumer prices for the masses in the same kind of way.
I think a lot of people would agree with you, Bramo.
Thank you.
We'll leave that story there. Let's turn to this one. Apple's first India-made iPhone Pro models are coming this year. Sources telling Bloomberg the company's partner Foxconn will begin assembling the new devices within weeks of their global launch in the fall. Lisa, this is a story we've been tracking for quite a while. De-risking the supply chain, which is kind of like a long-winded way of saying moving out of China.
And it comes without announcing it. And this is really one of the most interesting aspects. Tim Cook, the biggest diplomat between the United States and China, talking about the importance of China, both with respect to the consumer base as well as the production base, but just quietly moving away from production in the region. And oh yeah, the consumer is also pushing back against them. So can they also build some sort of consumer base in India that has traditionally gone for a lower price type of phone? These are some of the questions that have been plaguing Apple. This move seems to suggest they are starting to shift.
Although it's tiny, still, when you look at the vast majority of these phones being made, they're going to be in China because it's cheaper. But whether you talk to Republicans or Democrats, they're still pushing this idea where you started, friendshoring. Why? Because the risk and the geopolitical salvos between Washington and Beijing that are unnerving the C-suites.
Lisa nailed it. This is happening quietly. It's the diplomat, Tim Cook, just quietly operating and moving things around without making too much noise. because you don't want to upset the Chinese given how much of a presence you've got in that country.
But you got to take action. And if you don't take action, you're going to be left flat-footed, and that's what you see out of Tim Cook.
Talk about de-risking the supply chain. Let's turn to this. Just some stunning numbers coming out over the weekend. The ports of LA and Long Beach, which account for nearly a third of all U.S. container imports, posting their third strongest month ever in July. The frenzy of volume is rivaling the all-time highs set during the pandemic, standing in contrast to concerns over a cooling economy. Lee Klasko of Bloomberg Intelligence joins us now for more. Lee, I want to talk about what's behind it, but I want to start with how much better they're handling it. We've caught up with Gene Soroka, who heads up this port, a number of times over the last few years. Can you walk us through the productivity enhancements these ports have gone through, the progress they've made to better handle this kind of volume compared to where we were a few years ago?
Yeah, so like a few years ago, there was a lot of issues with the throughput at the ports just because there was a lot of congestion at the ports due to the surge in demand following the pandemic. You know, where we are today, you know, the ports in the U.S., you know, they have gotten a lot better over the years, but, you know, they still are very slow to embrace technology and automation. Relative to some of their counterparts in Asia and in Europe. But, you know, what it seems like from our vantage point is that the ports still have plenty of capacity within them to continue to keep that throughput at good levels. You know, the surge that we're seeing, it's obviously a great number. You know, the increase was pretty sizable, but, you know, there's a lot of things going into that. Last year in July, volumes were down around 25%. So, you know, you have a much easier comparisons. You know, that's not to say that there's nothing to be seen here. There's definitely, you know, good demand. A lot of that demand is coming from seasonality returning. Since the pandemic, we haven't seen normal seasonality, and we're beginning to see that. And some of that is being driven by the fact that the destocking cycle appears to be done, and retailers are looking to, you know, refill those inventory levels and get ready for back to school and obviously the holiday season in the fourth quarter.
Lee, let's go there. Is this really just a matter of seasonality, or is this stockpiling ahead of any kind of policy shift next year?
Yeah, it's a great point. You know, what we've seen, you know, recently is there's a lot of labor issues going around in North America. In Canada, the Teamsters that work on the railroads might be striking striking, or, you know, the rails are actually, you know, closing up their networks or winding down their networks ahead of a strike this Thursday. And then you have the port workers in the Gulf Coast and the East Coast. You know, their contract ends at the end of September, and there doesn't seem to be an agreement yet. Hopefully that will happen soon. And what happens is a lot of shippers, because they know about, you know, these contracts when they're coming due, is these labor contracts, is that they'll move freight maybe from the East Coast to the West Coast, or maybe from Western Canada to the Western United States. So, you know, you are seeing a movement. And also during the pandemic, as I mentioned earlier, there was a huge queue at the ports in Southern California, and the East Coast ports won a lot of share because of that, because they had a significant amount of capacity that wasn't being used. And what we're seeing now is maybe a shift back to the West Coast, and that can be driven by a lot of things. Some of that has to do with what's going on in the Red Sea. You know, before it made more sense to go through the Suez Canal. Now you can't go through the Suez Canal because of geopolitical risks from the Houthi rebels. So now they're going, you know, maybe they're trying to go back to a Trans-Pacific rates, and we've seen that in those Trans-Pacific rates, which are up around 170% from last year. So there's a lot of things going on. You have easier comps, you have seasonality, you have labor issues, and you have the destocking cycle that appears to be over.
Just phenomenal numbers coming out of those ports. Lee, appreciate the updates, sir. Lee Klasko there of Bloomberg Intelligence. Let's get you some stories elsewhere with the Bloomberg Brief. Here's Danny Berger. Hey, Danny.
Hey, John. The Democratic Republic of Congo is expecting Mpox vaccines from the U.S. as soon as next week. The Central African nation's health ministry said this outbreak has infected more than 16,700 people and caused 570 deaths. The U.S. pledged 50,000 vaccine doses earlier this month. Gold is climbing again this morning to trade at yet another record high at more than $2,500 an ounce. The precious metal has surged more than 20% so far this year, helped by expectations of rate cuts, geopolitical concerns, and central banks buying up gold. UBS said it expects the price to hit $2,700 by mid-2025 on the Fed's shift, central bank buying, and demand for portfolio hedges. Donald Trump reportedly says he would consider getting rid of a $7,500 tax credit for EV purchases if he's elected. In an interview with Reuters, the former president also said he would think about giving Elon Musk a cabinet position. Trump called the Tesla CEO a, quote, brilliant guy. And that's your Bloomberg Brief. John.
Danny, thank you. Up next on the program, the Harris policy pitch.
As president, I will be laser focused on creating opportunities for the middle class. Together, we will build what I call an opportunity economy.
And we'll talk about that next on the program. Live from New York, you're watching Bloomberg TV.
Do you think it'll be the case where someday you will be an investment committee or I'll be an investment committee and we just apply AI, decide whether it's a good deal or not, or we're not going to be there anytime soon?
I don't think we'll be there in the near term. And David, because being on investment committees, there's the analytics of the math, there's the people, and then there's judgment. So analytics of the math, I think AI will help us get way more refined. Right now, we have analysts building models upon models. Our typical investment memo is 86 pages. So we could refine that down very, very seamlessly to pieces. The people aspect to it, to make a judgment call on, do I believe this entrepreneur is going to go the next mile? Do I believe that the background of the entrepreneur, who they are, what they stand for, their values, their family, that's the harder one. I think AI is going to take some time to get there. And then the final piece ends up being judgment. And I don't believe we've seen anything yet that gives us a sense of judgment that we're able to apply.
This is Bloomberg News Now.
News when you want it at the touch of a button.
Another volatile day on Wall Street. We're seeing big moves.
All eyes on Capitol Hill as Democrats and Republicans prepare.
Today's job numbers casting doubt on the Fed's next move. Inflation remains front and center. And that's news when you want it with Bloomberg News Now. Get it 24/7 on the Bloomberg Business app, Bloomberg.com, and anywhere you get your podcasts.
Bloomberg News Now. Context changes everything.
Or other authorities.
Could face bigger challenges next.
Fed was going to keep rate World Cup. This is a 3
as the economic picture.
Covering the intersections of Hollywood, Silicon Valley, and beyond.
It's a multi-trillion-dollar industry. We'll show you what's happening in ETFs like no one else. Bloomberg ETF IQ, Monday on Bloomberg.
Stocks on the S&P 500 still doing okay. We're positive by 0.1%. Quite a run so far already. The longest daily winning streak of the year so far. Through Monday into Tuesday. Can we make it day 9 after day 8 of gains in yesterday's session? Under surveillance this morning, the Harris policy pitch.
For too many people, no matter how much they work, it feels so hard to just be able to get ahead. As president, I will be laser focused on creating opportunities for the middle class that advance their economic security, stability, and dignity. Together, we will build what I call an opportunity economy.
It's the latest. Vice President Kamala Harris looking to rebrand Bidenomics as she develops her own economic policy, zeroing in on the middle class. She's pledging to expand caps on prescription drug costs, revamp child tax credits, and eliminate price gouging. Mike Pyle, a former Biden administration Deputy National Security Advisor for International Economics, is currently an economic advisor for Kamala Harris and joins us now. Mike, it's good to see you, sir.
Great to be here.
BlackRock also worked in the Vice President's office, so you're an experienced guy to ask this first question too. There are already some laws around price gouging, particularly at the state level across this country. What would a Harris administration look to achieve that we don't already have?
Yes, I think you're right to point to those state laws. I think if you look at the principles that the vice president's thinking about when she thinks about an action like this, there are a few. one, this has got to be focused on the food and grocery industry. Two, this is really about emergencies. This is about very acute moments of dislocation, like after a hurricane or natural disaster. Three, going to build off of those state laws. There are 40 state laws on the books that go to price gouging in emergency situations. Red and blue states alike, that's going to be a model for her. She's also really focused on bad actors, nefarious actions. This is not price controls. There is no preset price metric or other kind of quantitative target she's looking at. It's really bad action. And lastly, she recognizes that the food industry in general is one that needs more competition, and she's going to work hard to spur small providers, both of food and groceries, to really work on that competition overall.
Let's unpack some of that piece by piece. We can get into the industry in just a moment. I want to talk about the word emergency and how you defined it. Would you define the pandemic as an emergency? And at what point did the pandemic start? And at what point did it end? Because I'm just trying to work out how this rule might be applied, how people might define things going forward.
Yeah, I mean, I think that the type of emergency that we have in mind is much more like an acute natural disaster. I think much more like hurricane, earthquake, a very acute dislocation. Obviously, the pandemic at some level was everything for 2 or 3 years. That's very different than a very acute dislocation on the back of a natural disaster.
Do you or the vice president right now see companies that are price gouging?
So, yeah, I think, like I said, I don't really think there are emergency conditions out there. So I think it's very hard to say that this is anything that would apply in the here and now. I think she does look at the food and grocery industry writ large, sees one that in particular places has a good deal of concentration. And I think as a result is really focused on spurring competition more broadly, including, like I said, with small providers, both on the agriculture and grocery side. If we can spur more competition, spur more supply, that's going to lead to lower prices for consumers, but that's different than going after bad actors in the course of an emergency.
Speaking of competition, there's a debate within the Democratic Party, especially the donor class and the progressives, about this exact thing, competition, antitrust, and whether or not Lena Khan should still be the head of the FTC under a Harris administration. Where is Kamala Harris, the vice president, on that right now?
So where the vice president is focused over the next 78 days on unifying the Democratic Party and beating Donald Trump. That is her core focus. I think, she, alongside the president, over the last 3.5 years, has built a governing record across a whole range of issues. She's proud of that record, but right now her focus is on prosecuting the case for the next 78 days.
Let's talk about the record. You briefed her every day as her economic advisor when she was vice president before you moved to the West Wing. At one point when she was running to be president, in the primary, she was against fracking. Now she says she's not. Healthcare at one point, she's supported to eliminate private health insurance. She says she's not. Do you know which Kamala Harris we are going to get if she becomes president?
Again, I would say she has built a 3.5-year governing track record with the president. If you look at issue after issue after issue, she and the president have made choices to advance the interests of the middle class, to advance the interests of working people in this country. I'd say, look at the record she's built as vice president, sitting in office for the last 3.5 years. That's the starting point for how you should think about how the vice president would govern when she's president.
There's a question about the feasibility of some of the proposals. I'm thinking in particular about the housing market and the $25,000 subsidies for people to be able to make a down payment, as well as adding 3 million homes. A question of whether you can do that in such a way that giving money to people for down payments won't just prop up prices and lead to less affordability. How do you sort of square that circle?
Yeah, I think the most important thing that you heard the vice president talk about with respect to housing affordability is saying, we've got a crisis of building in this country. We've got to get more units built. We need to be ambitious with respect to what we're going to target in terms of eliminating that affordable housing construction gap. And we're going to work with builders and developers across the country to get units built. We're going to work with state and local governments to knock down barriers to construction to get units built. That is the center of her vision. She also recognizes that as we do that, it takes time to get traction. It takes time to get momentum. It takes time to get things built. And in the meantime, people are still suffering, are still feeling that pinch of housing affordability. And something like a buyer's credit can make a difference for households struggling to reach the middle class in the meantime while supply ramps up.
I guess that one question that people have is what we saw during the pandemic was that some of the subsidies, some of the money that was sent to people was done before some of the products were brought online, which is part of the reason why we saw the surge in inflation. How do you sort of get ahead of that type of response, given that we've seen the difficulty in building homes consistently, the red tape, et cetera? It just takes time, not to mention the lumber costs as well as getting enough people to build the homes.
Yeah, again, I mean, I think that's why it was so important that you heard the Vice President putting the supply story at the beginning of the story of housing affordability. I think she's laser focused on recognizing there are barriers across this country, blue states and red states alike, to getting things built. And whether it's new initiatives to help builders and developers work alongside the federal government to get things built, whether that's working with state and local governments to punch through red tape, that's going to be her focus because she recognizes that's the key to affordability, and it's going to take time and focused energy to get that done.
Just to stay on Lisa's line of questioning, ultimately there's a duration mismatch here between how quickly you can stimulate demand and how quickly you can address supply. Will we just have to tolerate higher prices in the meantime? Is that basically what we're going to see? Isn't that the outcome of all of this?
So, I think that, these things are meant to work in parallel with one another, that supply is going to ramp up. We're going to get traction. There's going to be a lot of focus there. At the same time, there's a crisis today. Working and middle-class families need support today, and the Vice President's proposed a way to do exactly that.
Can we talk about taxes?
Sure.
What's a good corporate tax rate for this country?
I think you saw the Vice President embrace the Biden-Harris proposal. 28% is the proposal that the Vice President supported alongside what she and the President have already proposed.
So we move up to 28. Is she in line with Biden as well on what he would have done with the taxes that are set to expire, the tax cuts that expire in 2025?
Yeah, I think that if you look at the Biden-Harris budget, you see a range of tax proposals, you see a range of investments, you see a range of principles around how the TCJA expiration should be handled, and that's something that, as a governing partner to the president, the Vice President has embraced.
Is the deficit an ongoing concern for you and the team?
I mean, I think you heard from the Vice President herself on Friday when she gave her speech. She pointed to the fact that when you look at the Trump campaign playbook, it's extending and deepening tax cuts for corporations and the wealthiest. It is not fully offsetting those with a set of sales taxes on imported goods that will hurt working families. And as a result, that's going to increase and blow up the deficit. On the flip side, if you look at the Biden-Harris budget, there is net deficit reduction alongside the investments in the middle class. And she, continues to believe that deficit reduction needs to be an important part of the pitch.
We've run out of time and we've only scratched the surface. Do you think that the Vice President would sit down with Bloomberg TV and actually have a conversation about the economy? Because we'd like to make that happen.
I think that the Vice President looks to go meet voters wherever she can meet them, and there's a lot of constraints on her time over the next 78 days, but she wants to go where the voters are.
Got to make one interview happen, Mike. Come on. Mike Pyle, Economic Advisor to Vice President Kamala Harris. Coming up on the program in the next hour, Tracy McMillan of Wells Fargo, former U.S. Senator Doug Jones, Neil Dutta of Renmac, and Ed Al-Husseini of Columbia Threadneedle from New York City. You're watching Bloomberg TV.
To succeed in Wall Street, what skills do you need? You need to be somebody who claws people in the back, people that you have to be tough, you have to be fighting people all the time. What are the skills that really take to succeed in Wall Street?
Great question. Of course, you have to work hard. So I can tell you what I found for me, and it's probably counterintuitive. I had to stick out, which is interesting because I made the decision earlier. Being really the only woman, I already stuck out, and I thought I might as well double down on that. I can't hide. So how did I do that? It was by being a contrarian. And I refused as a research analyst to ever publish research reports that said me too. That said, oh, IBM reported earnings. They came in 2 cents ahead. One of the pennies was currency. The other penny was lower G&A, blah, blah, blah. Forget it. Big calls on big stocks. My very first piece of research I published was very negative at a time nobody did it. I stood the heck out. And when I was right, that elevated me. And David, I've done that as a research analyst, but I did it in business as well. Here's a business strategy. If everything's fine, just keep your head down and execute. Every once in a while, you have a big insight, And you can build an entire business, in fact, an entire industry around it.
It's the world's second largest economy with a growing influence in global affairs. But geopolitical uncertainties, deflationary pressures, and questions about foreign investment linger. Bloomberg, the China Show, brings you the unmatched expertise you need to keep track of breaking news, in-depth market analysis, and the most influential newsmakers in and around China. Bloomberg, the China Show. Weekdays around the world, right here on Bloomberg. Context changes everything.
What about artificial intelligence? Is artificial intelligence going to enable you and others to say, we have enough information to know exactly what something is going to be worth in terms of insuring it or not?
Artificial intelligence is finding its way into our business in a variety of different factors. I think the first piece is getting much better insight into data, which allows us to make better decisions on underwriting. It's also a great opportunity to service business better in terms of like call centers and different ways of what's using robotics and other AI will be very helpful. But it is an emerging practice within the industry and one that is evolving very quickly. So it's also going to present risks that other companies, how they use it and how they use large language models and making sure the decision making is very sound. So it's complicated, but it definitely is benefiting the business today.
Lots happening on Wall Street. I couldn't have been more wrong.
It's going to stay volatile for a while longer.
It's a bifurcated market.
Need to catch up?
This is Bloomberg Wall Street Week. I'm David Weston.
We've got the information and insight.
Year over year, you could start to see some cracks.
It might be overhyped short term, but it's underhyped long term.
From businesses most influential and instrumental.
A lot of the doom and gloom has been somewhat overblown.
If you're not living near the edge, you're taking up too much space.
Bloomberg Wall Street Week, only on Bloomberg TV and radio. Context changes everything. U.S. jobs numbers are released. Bloomberg has the report under surveillance with crucial data and expert analysis at terminal speed. Nobody covers jobs day like Bloomberg.
The inflation, Jeannie, I would say, has not been completely slayed.
It's the data that's driving the market's reassessment of how many rate cuts need to be done this year.
There's no doubt the Fed will go in September.
The idea of getting an extra even 30 to 40 basis points priced in, I think that's really a tough thing to ask for.
Those who are thinking that this rate cut is going to change Main Street are overestimating the power of 50 basis points on the street.
This is Bloomberg Surveillance with Jonathan Ferro, Lisa Abramowitz, and Anne-Marie Hordern.
What a rally we've seen in this equity market over the previous 8 days on the S&P 500. It's a rally that continues 90 minutes away from the opening bell. The third hour of Bloomberg Surveillance begins right now. Equity futures on the S&P 500 positive by 0.1%. On the NASDAQ, a little lift as well, up by 0.1%. Another read on the consumer this morning, this time from Lowe's. Home improvement, a real struggle. We saw it from Home Depot as well. If you park the weakness and just focus on the strength, retail sales, that's where a lot of people in this market have taken comfort from in the last week, Lisa, and it's contributed to quite an equity market rally.
They shrugged off questions around the housing market as idiosyncratic and pointed to the fact that with Walmart, we saw a consumer showing no signs of fraying. We saw a consumer very much continuing to spend, and frankly, we're seeing that out of a lot of the travel companies as well. Key question will be, will the Fed cooperate? We heard that from Bob Michael, that the key ingredient was a Fed that started to cut interest rates with this spigot of cash in money market funds that he saw potentially unleashed into the rest of the asset market.
Macroeconomic environment seems to be weighing on the likes of Home Depot and Lowe's, with these customers saying they're deferring these big projects, the decks that Lisa wants to enact and build out herself, do it yourself. What I have a question for is, what if some of these policies we're hearing from the Harris campaign, and now Trump basically saying, I don't like the idea, but maybe I'll do it, $25,000 going to you if you can, to help you buy your first home. What would that do if that actually happened to a place like Lowe's or to a place like Home Depot?
We heard from Mike Powell, economic advisor to Kamala Harris, the vice president, just moments ago on this program, and you got a sense for where they see policy. He wanted to keep talking about supply, and we kept coming back with the question, it takes a whole lot longer to solve the supply issue than it does to incentivize demand. Demand you can incentivize just like that, straight away, immediately. The supply side story, when you have a duration mismatch like that, it is the ultimate policy dilemma. In the meantime, you just have to accept it's probably going to contribute to higher prices.
Which I like that you kept going back to it, and there wasn't really a satisfying response, just simply because it takes longer to build a home than to give somebody cash, period, full stop. And we've seen this movie before. Key question is going to be, how much is this sort of sending a signal versus actual policy that actually can get enacted with any kind of real time frame? How much is this going to be something that you're going to kind of message to state leaders rather than actually passing a $25,000 bonus, or actually enact some kind of price gouging mechanism for emergencies?
A lot of this is rhetoric. It polls well, not exactly going to be reality. Price gouging was very interesting. We saw a big difference in terms of what has been marketed from Harris when she's out there talking about it, going after corporations, the cost of living crisis. The blame is not us. The blame is on these corporations. Mike Pyle couldn't really pinpoint a company that he sees as price gouging right now. And what he said is this is going to be in emergencies. Talked about hurricanes. You asked a great point, Jonathan. Does the pandemic count as an emergency? That's when this idea of price gouging came about.
Will they say the climate situation is an emergency? This is where things can get pretty dicey when they're open to interpretation, but my takeaway was just the same as yours. This was a serious walk back compared to what was leaked just last week, and it sounds a lot like what is already on the books at the state level across this country.
Which is the reason why you get the likes of Michael Zezas over at Morgan Stanley saying don't expect a lot of policy out of the Democratic National Convention, or frankly, much going into the election, because it's very hard to know what to take seriously and what not to, what can actually get enacted, et cetera. Bottom line is, a lot of people are looking at post-election, what actually does get enacted, and how that factors into the deficit. You talk about gold, for example, at a new record high. How much does this sort of relate to some of the deficit concerns at a time when people don't have clarity on that being the one real kind of ramification that people can pinpoint?
Yeah, I think regardless who wins, you're going to see a lot more spending in this country.
Exactly.
And that's probably not going to change anytime soon. Equity futures right now in the S&P, if you are just joining us, your scores look like this. We're positive again. We're coming off the back of an 8-day winning streak, and we're looking to make it day 9. As we've repeated throughout this morning, if you make it 9 days of gains on the S&P 500, it's the longest daily winning streak on the S&P going back 20 years. In the bond market, the 10-year 386.73. In foreign exchange, the euro going absolutely nowhere, 110.83. Coming up this hour, we'll catch up with Tracy McMillan of Wells Fargo as the S&P 500 continues its winning streak. Former Alabama Senator Doug Jones as D.C. anticipates what a Harris cabinet might look like, and Neil Dutta of Renmac on why the Powell put could make a comeback at Jackson Hole. We begin with our top story. Stocks rallying for the 8th day in a row, their longest winning streak of the year so far. Tracy McMillan of Wells Fargo looking for the Fed to validate the enthusiasm, writing the following: don't get too hung up on 25 versus 50 next month. The important thing is that cuts begin. We expect a total of 100 basis points of cuts this year and another 3 25 basis point cuts in 2025. Tracy joins us now for more. Tracy, before we get to the Fed call, I want to start with your market call. Get out of bonds, get into stocks, both small and large. Tracy, what's behind that?
Good morning. So what's behind that really is the shift that we're seeing, the pivot, if you will, now to lower rates. We do expect the Federal Reserve to cut in September, whether it's 25, whether it's 50, we do expect that cut. And so now we think it's time to move some of the cash out of short-term fixed income. We've been using that as a parking spot for the better part of 2 years. Now it's time to move some out and broaden exposure to equities. Lower rates we see, and we also see a recovery and growth in 2025, and it's that combination that we think is going to help smaller companies. And we're also adding to large caps. That's been a favorite of ours for 2 years as well.
What do you say to the bond strategists that come on this program, Tracy, and say you should take some of that money from the front end and just take it out further to the long end and stay in the bond market?
Yeah, so actually we're doing that too in diversified portfolios. Most of our portfolios hold both fixed income and equities, commodities, alternatives, so diversified portfolios. And within a diversified portfolio, we are now overweighting equities slightly, and we are underweighting bonds slightly. But within bonds, we're also saying that we want our investors to move from the long end towards intermediate and the short end towards intermediate. So we're underweighting kind of both of the tails of the yield curve, and we're bulleting that intermediate space.
Can you explain why that is? We just had Bob Michael of JP Morgan on, and he was talking about a potential 3% handle on the 10-year yield. As so much cash, the more than $6 trillion in money market funds, floods into longer duration bonds. Why do you not see that as that feasible?
Yeah, so we think that as some of that cash moves back into the markets, it will move not only into fixed income, but also into equities and other assets. Some of it will stay. You know, if rates are where we expect them to be, if the Fed's rate is where we expect it to be next year, then we think that some of that cash is just going to stay in cash. We think that the 10-year is probably going to be closer to 4% than 3% in 2025. So we see that as an opportunity to continue to hold bonds that are paying in the 4% range, but also moving some of those assets into equities.
You know, Tracy, you hinted at sort of a dynamic that's been a big debate on this show and beyond. How much of that more than $6 trillion in money markets actually is going to look elsewhere as rates come down? How sticky is it versus just being parked ready for asset prices to have a clear direction? How much do you think that either half or a quarter is set to move out into, say, stocks and intermediate bonds versus just be an alternative to bank accounts?
Yeah, we think that a lot of those cash assets are exactly what you said, money that is moved out of deposit accounts into money market funds because of the higher rate. So we don't expect, the majority of those assets to move into risk assets or out the curve to longer duration bonds, because most of it is going to be assets that people want to continue to hold short-term in cash for nearer term financial objectives.
Just want to finish on your Fed call, Tracy. Just go through those numbers. I promised you we'd come back to this. So here we are. We expect a total of 100 basis points of cuts this year. You say don't get too hung up on 25 versus 50, but based on how many meetings we have left this year, are you expecting 50 at one of these meetings?
So right now we are expecting 50 at the September meeting and then 25 at the other two meetings for the remainder of the year. But really that's going to hinge on August's employment numbers. So we don't think the Fed is going to give us any indication on Friday whether they're going to go 25 or go 50. But the important thing is that they are still planning to cut. And that is what markets are kind of hanging their hat on right now.
Tracy, do you think that if they did cut by 50 basis points in response to a weaker non-farm payrolls print, that would be good for risk assets or bad for them?
Yeah, so if they cut 50 basis points because of a weaker print, that is going to probably signal to markets that the economy is a bit weaker than the Federal Reserve had anticipated originally. So that's likely to add some choppiness back into markets. But we would say that any volatility in markets is a good entry point to purchase more large cap stocks and to build up that small cap position back to a long-term neutral weighting.
Tracy, appreciate the input this morning. Thank you. Tracy McMillan there of Wells Fargo. Just finishing up there on that call for the Federal Reserve. Looking for 50 potentially in September on the 18th, but all of that hinges on what happens on September 6th in the payrolls report. So sneak peek of September 6th for you. There's only 4 estimates so far in our survey, but I can give you the median. It's 155,000, which would be a move up from the 114 we printed a few Fridays ago, Lisa. 155 the estimate at the moment, and of course that's going to change in the next couple of weeks.
You know, it's going to be very exciting, not just on September 6th, but tomorrow we actually get the revisions to earlier estimates for the jobs figures going through March for the full year. I want to see how many jobs were actually revised lower, and then we'll start talking about how to sort of understand the trajectory of some of these numbers. I do think that there is more at play than just September 6th, but that is clearly the hallmark moment.
Just how much growth we've had and what's normal
exactly
in this world, and what kind of numbers should we be looking for in the next couple of months. Let's get you an update on stories elsewhere with an update with your Bloomberg Brief. It's Danny Berger. Hey, Danny.
Hey, John. Hamas says that it is keen on reaching a ceasefire agreement with Israel. In a statement posted on Telegram, p.m., Hamas denied what it said was U.S. claims that it's backing away from the negotiations. The Iran-backed Palestinian group said the recent draft deal was different from what was originally proposed by President Biden in May. The U.S. has called this one a bridging agreement and said that Israel has accepted the proposal. Donald Trump is downplaying criticism that he has undercut the Fed's autonomy. In an interview with Bloomberg News yesterday, the former president said he thinks it's fine for a president to talk, and it doesn't mean they have to listen. Trump also called Harris's plan to offer first-time homebuyers $25,000 a, quote, big mistake, but then went on to say that he might also offer help to struggling prospective homebuyers. Alaska Air and Hawaiian Holdings are now closer to finalizing their $1.9 billion merger. The waiting period for the Justice Department's antitrust review has now expired. The deal is still subject to approval from the Department of Transportation, which can impose conditions to ensure the deal serves customers. And that's your Bloomberg Brief. John.
Danny, thank you. More from Danny in about 30 minutes' time. Up next on the program, the morning calls, plus former Alabama Senator Doug Jones as D.C. tries to identify potential Harris cabinet picks. That conversation up next. You're watching Bloomberg Surveillance.
Bloomberg covers the world with unmatched reach and resources. From more than 120 countries, the moment news breaks, 24 hours a day. Bloomberg, context changes everything.
From the beating heart of global finance, economics, and politics, and wherever newsmakers are moving markets, Bloomberg brings you conversations that allow for deep discussions and important insights. What do you think the future is for inflation? Is this new normal? Are markets too optimistic? How do you worry about the things that are outside your control? How does the current fighting completely stop? I'm Francine Lacqua, and this is The Pulse, every weekday only on Bloomberg.
Always on the heartbeat of the tech
spread across global markets.
The real-time data aspect is going to be important.
We're going to bring you expert analysis on that. Sure.
Don't miss Bloomberg's interview with the
Getting you set up for the trading day, counting it down to the opening bell, about 1 hour and 14 minutes away. Going into that, the scores look like this. Equity futures on the S&P positive by another 1/10 of 1%. Let's get you some morning calls. First up, Evercore raising its price target on Palo Alto Networks to $395 and removing the cybersecurity firm from its tactical underperform list. The firm highlighting better than expected earnings. That stock is up by 2.2%. Next up, Baird raising its price target on Chewy to 32, keeping an outperform rating. The firm seeing active customer numbers stabilizing and potentially growing into next year. Slightly positive in the pre-market there. In early trading, higher by almost 0.7%. And finally, UBS lowering its price target on Estée Lauder to 104, maintaining a neutral rating. The analyst noting that both top and bottom line recovery is taking longer than hoped for, even with strong fourth quarter results. That stock is just about higher by about 1/3 of 1%. Let's turn to politics. A possible Harris administration will likely recruit cabinet members from D.C.'s rank and file. Axios reporting that former Alabama Senator Doug Jones is on the short list for Attorney General, a position he was floated for when President Biden was building his administration. Doug Jones joins us now for more. Senator, wonderful to have you with us on the program, sir. Thank you. We're all looking ahead to the rest of this week with the DNC in Chicago taking center stage. I'll start there, Senator. What would you like the focus to be this week for your party?
Well, I think we're continuing to focus on the future.
and not going backwards. We're going to focus on those things that Democrats have accomplished over the last 3.5, almost 4 years now. Jobs, the economy, things moving forward, getting inflation under control, bringing NATO strong and our alliances together to fend off Putin and Russia and strengthen democracies around the world. We're going to continue to look forward. And what we're going to continue to also do is to be, as Tim Walz says, joyous and unified. This is something you really haven't seen in the country for a while. But Kamala Harris and Tim Walz are bringing this country together, and we're going to continue to build on that and build that momentum as we go into November.
Senator, when you look at the polls, the top issue remains the economy. And then when you look under the hood, even if Kamala Harris is starting to tighten the polls, especially in swing states, most voters say they trust the Trump administration when it comes to handling of the economy. How does Kamala Harris put some distance between her and the current president, who they blame for things like high inflation?
Well, you know, I'm not really sure she has to put distance between herself and the current administration. Most recent polls are showing that people believe Kamala Harris would do better on the economy than Donald Trump. At least that's polls that I have seen. And they're all the same polls that have been doing this for years. So I also think that, and I've said before, her nomination gives the Democrats and America a reset button, an opportunity to look. And that includes not just looking at going forward and the messages that she will do in her administration, but let's look what has happened, a reset button through different lens. For 3.5 years, Donald Trump has absolutely demonized Joe Biden. And so many people in this country have seen the administration's successes through those eyes. Now they've got a reset. Now they can look at a different way, and the same messages are getting out there. You were talking about your numbers in the prior segment just now. So I think that people are going to start focusing in on exactly what's happening, and they're going to be looking, and they're going to look and determine, are you better off than you were 4 years ago? And the fact is, we are better off. Inflation may still be a little bit high, but it has come down. But people are working. The income gap has narrowed. People have jobs. Manufacturing jobs are coming to this country, and we've strengthened our ties around the world. I think the United States of America, with all its bumps in the road, is so much better off today than it was coming out of a Trump administration with COVID and joblessness and the problems that were had and January 6th and all the divisions and chaos that he created.
Senator, let's talk about this potential reset maybe on the horizon for you. The Justice Department right now is under fire from Trump and allies because they say it is politically motivated. If you were to take on this position, you are being floated to be the Attorney General. How would you ameliorate those concerns and potentially bridge those divisions and bring the country together?
Well, look, I'm not going to talk about any potential Harris cabinet. That is so far down the road right now. We've got to focus on winning this election. I think people ought to look at what Donald Trump would actually do to the Department of Justice. Look at Project 2025. Talk about weaponizing the Department of Justice, taking away career individuals and putting in place those who will do the president's bidding and not just policy matters, but doing the president's bidding, saying that they would go after whoever they can. If you read Project 2025, it's a frightening prospect on what's going on. I think that's the contrast right now. The next cabinet, the next administration has got a lot of work to do with the American people because Donald Trump and his MAGA movement have so infected the American psyche these days about what is about norms and about our institutions of government. There will have to be a lot of rework.
Doug, there's a question about what's rhetoric and what's actually policy. And I think that that's true with the Trump campaign, and I think it's true with the Harris campaign. There's a question about what price gouging and going after it actually means. We were just speaking with an economic advisor to her talking about in emergencies, which isn't exactly what's coming across. We hear about $25,000 for people to buy homes. Hard to see how that's going to really get through. How do you understand what could actually get through? Is this just basically that the tax rate's going to increase on corporations and that there will be a greater focus on just what can be done elsewhere going forward in an ambiguous fashion?
Yeah, you got to remember that there is a Congress. A president of the United States cannot do everything by executive action. It is a problem that we've got, and it is going to be a closely divided Congress no matter which way the Senate or the House goes. That's one of the things I believe Harris and Biden administration can do.
At this point,
pull people together.
At this point, there are a lot of companies that are waiting for some sort of clarity in Washington, D.C. before engaging in certain projects that could be expansionary and provide new jobs, but they're unclear about whether they can merge, whether that will be allowed, the whole Lena Khan question, but also in terms of what the parameters are going to be with regulations. How consistent will Kamala Harris's policies be should she be elected to President Biden? Is this basically continuation of exactly the same?
No, I don't think it will be basically a continuation. Look, this is it's a process. She's going to have to be the president for herself. She will have her economic advisors. They will come in there. She will start addressing more, I think, after this convention, the specifics of everything that she wants to do, and let the people judge. I mean, the people is going to be this jury. But I don't think right now you can say one thing or another what specifically she will do. That is going to be a work in progress. She's got to deal with a Congress. She doesn't want to have to do everything by executive action. That's been one of the problems that we have seen so far. One president comes in and has to undo the actions of another, or wants to undo the actions of another. What I'd like to see her accomplish after she is elected, and in that period that before she is sworn in and in the 100 days after, is to work with the members of Congress on both sides of the aisle. But you know what? That takes good faith on both sides of the aisle. It's not going to be possible to get anything done if the opposing party simply wants to put up a roadblock. So she's got that opportunity. I think with Tim Walz as her vice president, a very, very well-liked member of the House of Representatives for a number of years, I think she's got an opportunity in Tim Walz to really be active with the Congress to try to move legislation forward.
Senator, very quickly, do you still maintain ties with Republicans on the upper chamber?
Well, I talk to them when I get up there. I see them. We're still friendly. I have a lot of respect for a number of my colleagues that were up there. So many of them worked well with me on any number of pieces of legislation. That's exactly the same kind of spirit I hope that they will give Kamala Harris when she's elected, and whoever works with her on the legislative process.
Senator, appreciate your time today. The former Alabama senator there, Doug Jones. Project 2025 comes up all the time. How many people have read Project 2025? It's a 900-page policy book from the Heritage Foundation, which Trump has now repeatedly distanced himself from, but we keep hearing it repeatedly.
I read the spark notes of it. The issue with Project 2025 is a lot of the people that drafted it either worked for Trump or very close to Trump, which is why the Democrats continue to say that this is something that is potentially going to be an envisioning of Trump 2.0, even though Trump comes out and says this has nothing to do with us and tries to put a lot of distance between it.
Keep beating the same drum, don't we, repeatedly?
But look, on one hand, you've got Trump saying that Kamala is a socialist, she's a communist, she's going to come in, and then you've got the Harris camp talking about Trump and Project 2025, and he's going to, throw government out.
You're enjoying this, aren't you?
I'm loving this.
Yeah, every second. The opening bell is up in about an hour and 5 minutes' time. So we'll talk about markets and the economy up next with Neil Datta of Renmag and Ed Al-Husseini of Columbia Threadneedle from New York. This is Bloomberg.
our studios in New York and San Francisco, our expert hosts have the data and analysis about the companies you know and the startups to watch, plus the interviews you don't want to miss. Watch Caroline Hyde and Ed Ludlow on Bloomberg Technology, the only daily business show dedicated to tech, right in the middle of the trading action, every weekday, only on Bloomberg Television. Context changes everything.
Middle East and Africa. Vibrant resources and high-yield investment opportunities abound. Join me on Horizons Middle East and Africa for the stories, newsmakers, and insight from this exciting region. Now weekdays, only on Bloomberg.
The countdown is on. Everything you need to get the edge at the end of the market day.
Big tech earnings kick off later this afternoon.
Gilead is coming out right now.
We have take two numbers. Back to the markets, right? Our bread and butter.
NVIDIA is one of the best stories in the tech space.
That actually matters a whole lot more.
It might shock some of your viewers.
You're watching The Close.
Get ahead of tomorrow's trading with The Close, weekdays on Bloomberg. Context changes everything.
60 minutes away from the opening bell. Equity futures on the S&P 500 still just about positive. Likewise on the Nasdaq and the Russell 2 on the small caps are up by 0.06%. We've said it a few times this morning already. It's worth repeating. The equal weight S&P 500 is at a record high coming into Tuesday morning. If you switch up the board and turn to the bond market, your yields look like this on a 2-year, 10-year and 30-year. We pulled down across the curve a little bit more at the front end of the curve. So the curve steepened with a move of about 3 basis points lower on a 2-year to 4.0382%. Worth repeating also, we're light on economic data this week. The next big stop is jobless claims on Thursday. We're light on Fed speak as well. But if you want to read of the US consumer, there's a few more stopping points over the next 24 hours or so. TJ Maxx is one, Target is another. Lisa, just giving us a little bit more of an offering about what's happening with the US consumer at the moment.
And if it mimics anything we saw out of Walmart and others, it will be that the consumer is still spending, albeit the big companies tend to be accepting a bigger proportion of the dollars. I also think Thursday is important for jobless claims. How much they also confirm what we saw last week, which was they actually went lower. This sort of panacea type of data where you get a jobs market that still looks strong, even with ongoing disinflation.
Claims for Thursday, the estimates so far 232. So in and around last week's number of 227. We'll see what we get on Thursday, but certainly to Lisa's point, over the last few weeks, the drama of a few weeks ago, we kind of poured some cold water on it. Claims come back in. We've seen a couple of head fakes around jobless claims over the last year. In fact, last summer, same thing. Claims started to gap higher, same concerns, claims come back in. Payrolls revisions, and you've mentioned this already this morning, tomorrow, really, really important. You know, we move so much on any given payrolls Friday, and then we kind of forget about the revisions that we're going to get further down the road, and we could see some big ones to these.
I mean, if you think about right when we were recovering from the pandemic, the revisions made it look a lot better than the initial numbers suggested about the labor market, and had those numbers been coming out at the time, the Fed would have acted differently. They probably would have hiked rates sooner. At this point, people are expecting about 1 million jobs to be taken off the total for the year ended in March. Does that move the dial? Probably not, because that's sort of the expectation. At what point do people really start to see a very different dynamic in terms of the total labor pool, as well as how much momentum we have coming into September 6th?
That will give Chairman Powell a little bit more clarity when he delivers his address in Jackson Hole, Wyoming, this Friday at 10 a.m. Eastern Time. There's another central bank in focus as well. It's the BOJ, with the prospect of further rate hikes, not cuts, rate hikes at the BOJ further on down the road. With dollar yen at the moment at 146.30, just a little bit more of yen strength, Lisa. This story continues, and dollar weakness over the last 4 weeks. We could have a 5th consecutive week of dollar weakness.
This is pretty much a perfect recipe right now for the Bank of Japan officials. You have data that confirms rate cuts in the United States, along with ongoing global strength. At the same time, they did give that hike just recently, as well as research that came out overnight suggesting that they still are seeing inflationary pressures under the surface, particularly when it comes to wages. This is not written by Bank of Japan officials. They have those disclaimers, but nonetheless, the trajectory does seem to be higher, and they don't seem to be moving away from that type of tenor.
Dollar yen at 146.30. Under surveillance this morning, some top stories for you. Alaska Air and Hawaiian Holdings are one step closer to finalizing their $1.9 billion merger. The DOJ deciding not to challenge the deal, but the airlines still need approval from the Department of Transportation. Elsewhere, the proposed takeover of U.S. Steel by Japan's Nippon Steel is back in the bipartisan crosshairs. GOP nominee Donald Trump and Democratic Pennsylvania Governor Josh Shapiro both reiterating their opposition to the deal. Trump saying he will stop it if he's re-elected. And Anne-Marie, this is a political potato, and no one wants to be a political potato, but U.S. Steel is exactly that.
It is exactly that. I would say to the individuals trying to get this done during an election year was not a good idea, because this comes down to potentially winning Pennsylvania and making sure you get the rank and file union votes to come out and vote for you. The name that we don't have yet, the Harris campaign, declined to comment on her position so far when it comes to this. But I imagine she's going to lean towards Governor Shapiro and Donald Trump as well. This is not happening in an election year.
You'd have to imagine she gets in line with all the rest. This is an extremely hot political potato. Donald Trump now saying he would consider ending a $7,500 tax credit for electric vehicle purchases, telling Reuters he thinks tax incentives are, quote, not generally a very good thing. Trump also saying he's open to naming Tesla CEO Elon Musk to a cabinet or advisory role. Now, on the surface of things, this sounds kind of bizarre, right? He's set to get rid of something that's actually benefited one of these companies, and the CEO of one of these companies would actually go on to work in a cabinet.
Well, I found it so interesting when they sat down for their conversation. It felt like more Musk was trying to ingratiate himself with the MAGA world, saying we cannot demonize the EV world. We cannot demonize this idea of sustainability. And then Musk actually said, also, I think there should potentially be, more business leaders having a say in government. Secretary Musk, potentially, under Trump 2.0. I don't know.
What's the role, exactly? Government efficiency, is that what it is? The Secretary of Government Efficiency.
I think Jamie Dimon also sort of pitched this idea in that Washington Post opinion piece, that there should be a cabinet position specifically for a business leader.
Honestly, I'm just, again, okay, fair enough. I'm sitting here kind of at a loss, because how do you take any of this stuff seriously? In a passing conversation, he talks about, some of these incentives as being a bad thing, and then he says, but I'll put them in. Question that I have is, who has his ear? Right? And what is sort of the goal of the people who have his ear? And there's a real question about Elon Musk having his ear. Does that mean that he's going to be more amenable to some of these, I don't even say incentives, but a more EV-friendly type of regime? It's an open question. I've heard some things that are saying yes, some things that are no, but the reality is we're not getting actual policy debates right now, because no one's willing to actually have that. I mean, even with Nippon Steel, they're making their pitch to the labor market, to the labor union, and that's going to be some sort of, sweeten the pot. And basically, politicians are going to be just basically weighing in to try to cater to a certain demographic.
Would you like to park this story? We can park this story now and move on. Let's bring in Neil Dutta of Renmac. Neil, wonderful to catch up with you, sir. We're not going to talk about politics, don't worry. I want to talk about something far more interesting. Revisions to the SEP in September, I don't think have been talked about nearly enough. You mentioned them in some recent research. Neil, how drastic will those revisions be in September versus where we were back in June, which feels like a lifetime ago?
It's a good question. I do think that, right now it looks like GDP is running a little bit above their estimates, but obviously the most notable revision is probably going to be the unemployment rate, right? Because the unemployment rate currently stands at 4.3%. That's well above where they thought it would be. It's actually somewhat higher than they thought it would be at the end of 2025. And I think that's really what's interesting to me, John, is if you look at their 2025, estimates, they have the unemployment rate, I think, at 4.2%, core inflation at 2.3%, and the federal funds rate at 4.1%. So if you think about that, we're already above their unemployment rate estimate. Over the last 3 months, core PCE has been 2.3. When the latest data comes out, it's going to be on a 3-month basis below 2%. And yet the Fed funds rate is, basically at 5.5%. So it's kind of like, which of these is not like the other? That's why I say we should expect a relatively, abrupt kind of about face in terms of these revisions. And if we don't get that, I think there's a risk of increasing concern that the Fed may be a little behind here.
You touched on the recent data, Neil. We've had a few guests on the program taking some encouragement from the data of the last week, particularly retail sales. You called that the exception and maybe not the rule. Why do you think that is the exception? Why do you think we can disregard what we heard last week?
Well, it's just a fact. I mean, think about all the hard data that's been released for July. It started with a bad employment report. We had weak housing data. We had weak industrial production data. We had a good retail sales report. Okay? So, I think standard business economics, obviously the employment number is going to get the most weight. And then the other indicators are all secondary. So I think it's sort of important to not kind of get carried away with retail sales. And you have to have a fundamental kind of framework for why would consumer spending be taking off? I mean, if you take all the data at face value, John, it basically means that in July we had an unsustainable decline in the savings rate. So it's probable that the savings rate perks back up and, you see consumer spending cooling. And then, obviously there's some interesting kind of details under the surface, right? I mean, I pointed this out to our clients, but if you look at building material store sales, I mean, we see what Lowe's said today. We see what Home Depot said. They're talking about sales being down 5% sequentially, yet you look at the census data on building material store sales, and it's up 5% year over year. So it's sort of, I do think that the retail sales number probably overstates things somewhat. Doesn't mean the consumer's falling apart, but it's unlikely that it's sustaining at a 3% real pace.
In some ways, Neil, it seems like the market is pretty much on the same page as you are. They're expecting the Fed to cut by more than 25 basis points come September, 32 basis points right now priced into Fed funds futures, 100 basis points by year end, even with an economy that does remain resilient, ongoing, maybe despite some of the weakness that we're seeing on the margins. I mean, isn't that basically what you're saying?
Well, I think there's probably a little bit more downside risk in the economy than the markets may appreciate at the moment. I mean, to me, I think that the housing market is slowing. I mean, if you look at single-family starts, permits, new home sales, transactions, I mean, they're all very, very weak. And we do know that construction employment has been a notable sort of upside surprise factor, you could say, for employment. And I do wonder how long that lasts. And we also know that we had a fairly significant inventory build in the second quarter that probably won't persist in the second half of the year. And so I do think the slowing in goods producing industries at a time when the labor markets are slowing, that has my attention. And so I think for the Fed, if all you're going to do is string out a bunch of 25 basis point rate cuts, I mean, it could take a long time to get to neutral. And the further the Fed is away from neutral, I mean, they're very restrictive by their own admission, the more the risk to the economy builds. So, I think that's kind of the debate. It's not about whether they go in September anymore. I mean, that debate is over. When you have Neil Kashkari talking to the Wall Street Journal about a September cut, I mean, that debate is basically dead. Now it's really about how quickly they get to neutral and where neutral is. And, given the fact that they're very far from neutral, and the fact that the data on net has been somewhat weaker than expected, I do think that kind of supports larger moves at the outset.
Neil, how much do you think benchmark rates would have to go down to really support the housing market in the way that you think is necessary to keep the economy from falling much more deeply?
I mean, I think you need to see 30-year mortgage rates at, I don't know, maybe below 5.5%. I guess the issue is, why hasn't the housing market really perked up, right? I mean, if you look at 30-year fixed rate mortgages, I mean, they're basically where they were last spring, right? I mean, nominally around 6.5%-ish. I think that's the latest reading. But you haven't really seen any meaningful increase in home sales, purchase demand. And I think the reason is that when inflation's 4.5%, a 30-year mortgage at 6.5% looks okay. But when inflation's below 2%, it's not so much of a good deal. And so I think you need to see. I think you need to see a bigger decline in mortgage rates to get the housing market going.
Wouldn't you expect the housing market just to seize up now, Neil, particularly for first-time home buyers? Because I've got the prospect of getting some money from the government next year now and lower interest rates. Why on earth would I buy?
I mean, it's a good question. I don't know. I mean, I wouldn't. If I was a first-time home buyer, I wouldn't be making my decision on what DC may or may not do. That to me wouldn't go into my calculus in terms of when I would buy. I mean, I think it would really be about my employment situation and how I feel about that. And at the margin, we know that consumers feel a little bit worse about their employment situation. I mean, expectations for weaker labor markets among consumers and the surveys that we look at the margin are deteriorating. And I'd also look at, where are interest rates? That would be the calculus, not, a politician promising us manna from heaven.
Neil, appreciate it. Thank you, sir. Neil Dutter of Renmac, as always. Thank you very much. I want to turn to this quote. Here's a quote for you. Either rates will decline more rapidly to support a weakening economy, or the economy will stabilize and require fewer rate cuts than currently discounted by markets. There is an inconsistency that will need to be resolved in the coming quarters. That quote belongs to Ed Al-Husseini of Columbia Threadneedle, and Ed joins us now for more. Ed, which outcome are you betting on at the moment?
I think Neil framed it really well. I think the economy is seeing more downside risks at the moment, and the pressures on the Fed to front load some of this easing and add a little bit of accommodation to the economy. So the first option is where I'm placing my bets.
Do you agree that we talk about housing as sort of an idiosyncratic market within the broader economy that's healthy? Neil saying that that's actually not the case. It's actually emblematic of where the issue is and where there could be some sort of bigger downside. Is that what you're looking at as well?
Yeah, it's been striking. So housing has been, historically one of the most interest rate sensitive parts of the economy. It responded very quickly when the Fed hiked rates in 2022. We saw housing capex decline. We saw housing employment, housing construction employment essentially go sideways. And so it absorbed those Fed rate hikes very quickly and exerted a brake on the economy. We also saw it start to recover in the course of last year. It stabilized. In fact, at the beginning of this year, it was a marginal net positive add to GDP. And the expectation was that, essentially the housing market would become used to a higher interest rate environment, a higher for longer environment, and we would see some recovery. That expectation is now playing out. We're seeing housing, again, decelerate at the beginning of this year. And looking ahead, like Neil pointed out, the leading indicators are beginning to turn down. And that's a really important sign that there are brakes being inserted on the economy at the moment.
So, Ed, it sounds like you might be more in the Bob Michael camp than anything else, given the fact that he sees a flood of cash potentially going in longer duration bonds, not necessarily exactly the why behind it, but this idea that maybe people are underestimating how much benchmark rates have to go down in order to offset some of this weakness that you see sort of exemplified in the housing market. Is that basically the trade that you're making?
I don't know if people expect cash to flood to different parts of the market all the time. It never really plays out that way. I think the bet that we're making explicitly is that real interest rates, inflation-adjusted rates, are around 2% across the curve at the moment. It's becoming clearer, I think, to me and clearer to the Fed that the economy really cannot sustain these rates without being susceptible to a slowdown. And so it makes sense to bring them down. It makes sense to bring them down closer to around 1% over the course of the next year or so. And so we're betting that the market's underappreciating how quickly that's going to move.
Ed, when you say 1%, do you mean 100 basis points, or do you mean actually moving rates down to 1%?
It's about 100 basis points in terms of 10-year real yield, right, which is about 1.85 to 2% at the moment. And that's really the beginning of the process. That's assuming that the economy stabilizes. That's roughly neutral. If the economy needs significant assistance, then you could see those real interest rates go down closer to zero. And in fact, they were negative back in 2020. So we're talking about the first part of the process, bringing rates from a place where they're restrictive, they're exerting brakes in the economy, to roughly flat, roughly neutral.
A lot to chew over here. Ed, appreciate it. Ed Al-Husseini there of Columbia Threadneedle with an interesting call on the bond market. Lisa, I just wonder, what is gold sniffing out as we have all these conversations about the scale and degree of rate cuts that we need, with gold sitting close to another all-time high as I look at the screen?
I've gotten a couple of messages about this. One of them is talking about the deficit, this idea of perhaps people are looking at gold as the haven asset rather than long duration bonds because the deficit is going to remain ever present. There is this feeling, and we were hearing this over the past 2 weeks, that fixed income is where the volatility is going to be going forward. Whether it's the election cycle or whether it's this question around the Fed's response function, exactly how effective their monetary policy can be in the long end when they really have control over the front end. These are some of the things, in addition to central bank buying, that have pushed a lot of people to gold.
Gold just keeps setting new all-time highs. So let's get you an update on stories elsewhere this morning with your Bloomberg Brief. Here's Danny Berger. Hey, Danny.
Hey, John. U.S. antitrust regulators are likely to challenge Couche-Tard's bid to buy the Japanese operator of 7-Eleven. That, according to the FT, the tie-up between the Canadian operator of Circle K and Japan's 7 & I would create one of the largest retail chains in America. People familiar told the FT that regulators are concerned it would increase prices for consumers and damage the labor market. Boeing has paused test flights of its 777X jetliner after the discovery of a crack in a component that connects the plane's engine to its wings. The plane maker said it found the damage during routine maintenance following a test flight. The component didn't perform as designed, according to a company statement. It's the latest setback in Boeing's efforts to certify its largest jetliner, already 5 years behind schedule. An RBC analyst said the grounding could delay deliveries to 2026. And John, as you mentioned, gold is climbing again this morning. It is trading at yet another record high at $2,500 an ounce. The precious metal has surged more than 20% so far this year, helped by expectations of rate cuts, geopolitical concerns, and central banks buying up gold. As for where it goes from here, UBS says that it expects prices to hit $2,700 by mid-2025 on the Fed shift, central bank buying, and demand for portfolio hedges. And that's your brief, John.
Danny, thank you. Appreciate it this morning. That last point is the point that Lisa's picking up on, an important point. Next on the program, we'll set you up for the day ahead, and we'll catch up with Katie Lyons at the DNC over in Chicago from New York. This is Bloomberg TV.
There are many global investors that aren't interested in China anymore, but there's a lot that are. And obviously the local investors have money in China and are doubling down on investing in China. Many of the Asian investors, and in fact a lot of the Middle East investors, the Americans are gone away. Therefore, there is an amazing opportunity to put capital to work and get returns which are excess what you would get in other places. Where there is lack of money, there is usually opportunity. So we continue to build out our business in China. It's just where the money's coming from is different. And so we're raising local money in China for investing and bringing those that choose to be there to invest in China. So it's just a different, where the money's coming from is just different.
Welcome to the world of decentralized finance.
We thought we'd take a look at Bitcoin versus the S&P 500.
Bloomberg's covering all things crypto, the people.
The tectonic shift emanating from Washington.
It's really a tale of two cities in crypto.
Crypto shouldn't be partisan.
The transactions.
Really a record-breaking moment.
Crypto VC is back.
And the technology.
It's really the beginning of a global on-chain economy.
And if America doesn't embrace it, we're going to be left behind.
Bloomberg Crypto, only on Bloomberg. Earnings.
I know it's like your Super Bowl, right?
I can't wait. It's like opening presents in the morning.
All right, it will be exciting.
Nobody covers earnings like Bloomberg.
The open about 38 minutes away. Equities just about unchanged on the S&P 500. Let's see if we can make this rally stretch from day 8 into day 9 and maybe even beyond. Counting you down to that opening bell. Here's the trading diary, the calendar for the next few days. Earnings from Toll Brothers coming after the closing bell. We'll get more results from Target, Macy's and TJX tomorrow, plus Fed minutes at 2 p.m. Eastern Time. Thursday, another round of claims, and on Friday, Fed Chair Jay Powell delivers some remarks. Turning to the other event this week, the DNC underway in Chicago. Former President Barack Obama speaking tonight followed by Harris's running mate, Governor Tim Walz, on Wednesday. And finally on Thursday, Vice President Kamala Harris will deliver her acceptance speech at the DNC in Chicago. Bloomberg's Katie Lyons joins us now for a preview of what to expect today. And Katie, interesting that we won't actually see Harris and Walz exclusively in Chicago. They'll be elsewhere as well on the campaign trail.
Yeah, they will, John. And interestingly, they're going to the literal scene of the Republican. That convention was held just 4 weeks ago. It's happening pretty much simultaneously with the primetime speeches that will be held at the United Center here in Chicago this evening, 8 p.m. Central Time, 9 p.m. local time. And it will be interesting to see the kind of energy and crowd comparisons that that appearance may draw, knowing that Donald Trump has really had issue with the crowd sizes that this ticket has been able to draw in the month since this campaign launched. He even at one point suggested that the crowds were AI generated. So they will be doing that, trying to raise attention to their ticket in a swing state. Donald Trump himself, of course, will be in the swing state of Michigan today. But meantime, the proceedings will continue here in Chicago. It is not just former President Barack Obama who we will hear from tonight, but the former First Lady Michelle Obama, who polls show is one of the most popular Democrats in the country. We'll also be hearing tonight from the second gentleman, Kamala Harris's husband, Doug Emhoff. So certainly a lot of speeches planned for tonight. We'll all be watching to see if the program runs a little bit more on schedule, remembering that last night when President Biden gave his speech, which was in part a legacy address, in part campaigning for Kamala Harris, it was well past midnight on the East Coast by the time he wrapped up.
Yeah, Political leads with that today with someone who's used to these conventions saying, do they realize the universe runs on East Coast time? Kaylee, so I'm sure you didn't get a lot of sleep last night. But one moment in that speech I think was very significant when President Biden came out and said, you know, they have a point. Talking about the thousands of protesters that are in Chicago, some even getting into the DNC perimeter. What is the feeling on the ground between how unified this Democratic Party is when it comes to the situation that there's a big gap from progressives and centrists when it comes to Gaza?
Well, what the high-profile Democrats gathered here would tell you, Anne-Marie, is that the party itself is very divided. That doesn't mean the Democratic electorate itself is as or very together, rather, and the electorate itself may be a bit more divided. You are absolutely right. We did see protests here in Chicago yesterday. At one point, a number of protesters broke through a security barrier and had to be apprehended by police. They didn't actually make it into that first initial actual barrier around the United Center, but certainly you are seeing that activity. There were thousands of protesters. More protests are scheduled for today and later on this week as well. There had been conversation yesterday when the news broke from the Secretary of State Antony Blinken that Israel had agreed to a ceasefire bridge proposal put forward by the U.S., calling on Hamas to do the same, that may be very opportune political timing to coincide with this convention. We heard that President Biden talk about that progress being made last night, and Congresswoman Alexandria Ocasio-Cortez, of course, one of the progressives, got some of the biggest applause of the night when she talked about how Harris will continue that push forward toward a ceasefire. Harris, of course, is seen as someone who is more sympathetic to the Palestinian cause, perhaps a bit more willing to stand up to Israel and Netanyahu. So it'll be interesting to see how that narrative carries forward throughout the coming days.
Katie, thank you. Looking forward to the coverage throughout today. Katie Lyons there of Bloomberg. Over at the DNC in Chicago, more coverage from them. Balance of Power a little bit later on this afternoon, and again at 5 p.m. Eastern Time on Bloomberg TV. Coming up tomorrow, Andrew Sheets of Morgan Stanley, Torsten Slock of Apollo, Sarah Hunt of Alpine Saxon Woods, and Libby Cantrell of PIMCO, and maybe even Anne-Marie in Chicago. We'll see if we can make that happen a little bit later at a New York airport. From New York, this is Bloomberg.
Good morning, this is Bloomberg Daybreak Europe. I'm Tom McKenzie in London. These are the stories that set your agenda.
Taking you from the U.S. market's close to the overnight session in Asia. We'll walk you through what you need to know to kickstart the European trading day. Live from our European headquarters, we bring you the day's top market-moving stories, unmatched expert analysis, and on-the-ground reporting from across the continent. Tune in every weekday at 6 a.m. London time, only on Bloomberg Television.
In 2015, I was not optimistic because nobody was working on the hard problems. The energy R&D budgets had gone down. The venture investing in climate had gone down. It was completely out of fashion. So I don't know what people were optimistic about then. The fact is, we built essentially from scratch, with lots of supporters, a really mind-blowing level of innovation against emissions. And, in the last 9 years, that's gone better than I would have expected. So only now could you even, plausibly be optimistic about the path of emissions? And someone who said, hey, nobody's ever scaled things up very like the speed that we knew to before, they're welcome to say, hey, I'll believe this when I see it. In the meantime, some people who care about this issue are really out, trying to think, do we need permitting reform? Do we find, what new ideas haven't we found yet? How do we fund people with those new ideas? How do we get the costs of these things down? How do we collaborate on a global basis? So we're still not at the point where it's guaranteed or even that it'll be easy, but at least there's a theory of change.
Why does this business model work? Because it's virgin space. It's never been done before, and it'll never be done again. When you step back and you look at something that's been golf through institutions, has been the way it has been for 53 years without change. In 1993, I stepped back and said, okay, this is not right. It's doing the same old Groundhog Day. Everything's the same. Players are a pass-through entity. They're not getting any equity built in their day. Once they're done playing, they're out. I thought, that's just not right. When you have to build a sustainable model, you need to have these players, these famous, the world best, the best of the best. You need to give them equity into the future. You need to give them a vision of where they need to go and how they're going to get there.
Futures are flat after 8 days of gains. 30 minutes now until the start of cash trading. I'm Matt Miller.
I'm Shanali Basak.
And I'm Katie Greifeld. Bloomberg Open Interest starts right now.
Coming up, the S&P 500 looking to ink its longest winning streak this year on bets that the Fed will soon signal that it's ready to cut rates, but the rally may stall.
Fresh insight on the consumer as more earnings roll in. Home improvement retailer Lowe's cuts its guidance, blaming a frozen housing market.
And two developments on the M&A front. The Paramount saga gets a new twist, and the Alaska Air Hawaiian deal moves a step closer to the finish line. We're going to get to all of that and more, but let's take a look at where markets are trading about 30 minutes until the cash open. It's pretty quiet, of course. We had a rip-roaring day yesterday, a late rally into the close, 8 straight days of wins on the S&P 500, taking a little bit of a breather right now. Same thing, too, if you take a look at the NASDAQ 100, a touch lower in the pre-market, and then you take a look at the bond market, a rally actually on our hands when it comes to the 10-year Treasury. Yields currently off by about 3 basis points, Matt.
We have our global charts producer, Dan Curtis, in town this week from London. He put together this beauty, which shows the market's expectation of Fed cuts over time. Look what's happening now. We're pricing in 1 cut for every of the next 5 meetings. Is that really what a soft landing economy will need?
Beautiful chart indeed, Matt. We're also going to take a look at some of these stocks ahead of the open to keep an eye on. Eli Lilly, the company's Zepbound weight loss shot, cut the risk of obese patients developing diabetes by 94% in a 3-year study. And you have Eli Lilly now up about 1.7% pre-market. Lowe's on the decline, though. Lowe's cutting its guidance, full year guidance, as the frozen housing market is keeping consumers on the sidelines. Lowe's now down about 0.5%. Hawaiian just rip-roaring as well, rising after the Justice Department deciding against challenging its proposed tie-up with Alaska Air. You now have Hawaiian up more than 11% pre-market, Matt.
All right, we have had an amazing winning streak. We already had the best winning streak of the year last week. Now, we've had 8 days in a row of gains, so twice the best winning streak of the year.
And may I draw your eyes to the equal weighted index, the S&P equal weight, actually hit a record high yesterday. I know we haven't been talking much about the rotation trade. That narrative has come off the boil a little bit, but you can see there actually the S&P equal weight maybe not quite there.
Well,
but
notice that, so the equal weight is the white line, right? It is at an all-time high,
right,
but it's still being drastically outperformed by the market cap weighted.
Here on the month, actually, it's outperforming both the Mag 7, 2% higher. Mag 7 only up by about 0.5%, outperforming the S&P 500.
Well, bringing it back to tech, of course, we were talking with Nadia Lovell yesterday that when it comes to that broadening out, that rotation into other sectors, it's a nice to have. But if you're going to get back to all-time highs on the S&P 500, you need to have that tech outperformance.
Let's ask Joanne Feeney about it. She joins us right now, portfolio manager at Advisors Capital. Joanne, good morning. Welcome to the program. Thanks so much for joining us. What do you think about the idea of shifting into the equal weight S&P? We've had more and more guests talk about that. Or do you need the dominance of these mega cap tech companies in your portfolio still?
Well, Matt, I think you need some of both. You want to be diversified as the equal weight, tends towards. But clearly, the major amount of appreciation we've seen is coming from a lot of the tech companies where growth is really strong and is likely to last for many more years to come. So one thing that's interesting, though, that explains some of that recovery in the equal weight index is the fact that the other 493 companies outside of the Mag 7 have, for the first time in about 6 quarters, delivered pretty strong earnings growth. I think it's like 7.5% year-over-year earnings growth, and they haven't seen growth like that in a half a dozen quarters. And that helps to explain why the equal weight has recovered so much, because we're just starting to see earnings drive those companies' valuations too. Nevertheless, you look at appreciation over the last year, obviously the market cap weighted is going to outperform just because you have these really substantially growing companies leading that index higher.
And Joanne, that's why I love to look at the equal weight. It feels like a really good temperature taker for actually the earnings growth and the earnings health of the rest of corporate America. And with that in mind, I mean, you talk about this broadening out that we're seeing in earnings, the other 493 stocks, but there are some concerns about here that we're hitting the high water mark when it comes to earnings. Already, if you take a look at third quarter estimates on some measures starting to come down. And when you add that all together, what does that say of the future of this beautiful broadening out that we're seeing?
Yeah, Katie, it's going to be tough, I think, to get through the second half of the year when we're seeing some elements of the consumer weaken. And we have seen that for a while. Clearly, in aggregate, the consumer still remains pretty strong. It is inflation-adjusted, disposable personal income is still growing on a year-over-year basis. That's a positive for aggregate spending, but within the consumer, we're seeing a lot of fractures continue to develop, particularly at the low end. And so you really have to pick and choose which kind of stocks you want to have exposure to here. And we've continued to like TJ Maxx. We'll see what they do this week. But, more luxury items or middle of the road, middle income folks are starting to trade down. And we expect that to continue. So it really is a tough second half, we think, coming up. Plus, you have all these extra risks associated with the election. So, this is a place where you want to find companies with very strong, reliable secular growth, own those for the long term, and try not to get distracted by what might be happening for 6 months.
Joanne, I'm glad you brought up TJ Maxx in particular here. Katie has been making the point all week that we have a big week for consumer earnings. They are very mixed so far. You're seeing that trade down in full effect. Some firms are bigger beneficiaries than others. So what do you think about the picks that you're making now? How are you choosing picks in the consumer sector in particular? What are you avoiding?
Yeah, so it's really interesting. You have to look at the consumer, not just for the consumer stocks, not just for 1 year, but for several years. Some companies really got a boost in 21, 22 when folks were spending all that extra cash they had after being locked up for a year. And those, are seeing now some negative comps. Some of their sales are actually falling on a year-over-year basis, but that doesn't mean they're in trouble. That just means they're coming back to a normal trend. TJ Maxx, by contrast, saw a tough year in 2021, and they've pretty much been on a nice, solid trend upwards over several years. So we like to look for the areas which are providing bargains for consumers because their budgets are being constrained. They want to find those bargains. TJ Maxx is one. McDonald's, while it's having some sort of global issues, is still a really solid company and is appealing to a lot of consumers. And they're making moves now to become more price, attractive to some segment of the consumer population. So look for companies that offer bargains because we think with tightening budget constraints, that's where consumers are going to have to go.
Is Casey's General Stores one of those companies?
Yeah, absolutely. And of course, they tend to benefit during the summer seasonal travel months with more folks on the road. And they have some great offerings that really keep their loyal customers coming back, whether it's the pizza or the sandwiches. So they're doing a better job on efficiency, and they're continuing to expand. So yeah, it's one of our favorites. We've owned it for a long time. But then, of course, we also like tech, and we've seen some good moves over the last couple of days, whether it's Palo Alto's report or AMD's acquisition, that really reinforces the importance of AI and how it's growing and creating new opportunities in that space.
Well, I definitely want to hear your thoughts on tech, but I want to sit on retail a little bit longer because you talk about TJX, for example, Casey's General Stores, but how specific, how single stock focused do you have to be when you're taking a look at some of these retail names? Because you take a look, for example, at the Retail Select Industry Index, it's been underperforming the broader market. I mean, it's up 7-8% year to date so far, but of course that's lagging behind the broader S&P 500.
Yeah, Katie, you do have to pick and choose individual companies because each company is targeting a different element of the consumer base, right? And what we're seeing now, and it's pretty unusual, right? We're seeing different consumers in different parts of the income distribution behave according to how tight their budget constraints have become. So the lower group and even up into the middle income are starting to have to trim. And so different companies are appealing to different segments. And that's why we're seeing such diversity. And that's why we see that the index that you mentioned are behaving not so great relative to the overall market, because we're seeing some of those groups really suffer a drop off in spending. And some of this is temporary. I mean, we like Home Depot, for example, even though they're facing some tough comps right now. Some softness in spending with those, continued higher short-term interest rates is hurting some of their shoppers. But ultimately, that's a place where people will come back to, and it's an exceptionally well-run company. So we'll continue to own a Home Depot, for example, even if in the short term they're struggling a little bit. First of all, they have a decent dividend, and that's an important factor for our clients who like to see income in their portfolios to help them carry through some of the stock fluctuations.
Beyond income as well, interesting to hear about why you're choosing some parts of certain sectors. Think Palo Alto Networks, for example. Smart choice as well. Palo Alto saying their forecast is more upbeat. They're boosting their buybacks. They're up today pre-market on the heels of that report. Why is this a stock
already up 400% over the past 5
yeah,
years?
Absolutely soaring here. Why is this a stock you like?
Well, so cybersecurity, as everyone knows, right? You wake up in the morning and it's hard to avoid hearing about some new hack at some company or a school or a government or a hospital. And so we know cybersecurity is basically like a utility. It's something you have to have. And Palo Alto is the leader in the space. They do both hardware and software solutions, and they've combined those. Now, they had a little bit of a bump in the road earlier this year when they had to find new ways to reach out to new clients to get them to switch away from discrete solutions offered by a wide variety of vendors to come to Palo Alto, who could provide them the entire set of solutions from one provider. But there was a bit of a hurdle for customers to do that. They had contracts that lasted 6 months here, a year there. So Palo Alto fronted them basically the cost of switching. And it was a brilliant move, but it was a long-term beneficial move and a short-term bit of pain. So Palo Alto is now recovering from that and is now proving that it was a good strategy, this so-called platformization. And AI is only going to complicate security risks for companies, again, and governments. And so Palo Alto is going to become even more essential to the future of successful, business practices.
What about defense? I mean, not just cyber defense, right? You like some actual defense companies that make stuff for planes. RTX Corporation makes seats, lighting. They also make tech for planes in navigation systems, for example, guidance systems. Why do you like them over, say, Lockheed Martin, General Dynamics, Boeing?
Yeah, Matt. So we actually own several different defense companies in different strategies at Advisors Capital, depending on, again, the particular needs of the strategy. And as you know, right, we have all individual stock investments for our clients. So mixing and matching is part of the whole approach we take. And defense companies can play a few different roles in a portfolio. They can be defensive, that is when, global risks rise. defense companies tend to rise. They also can provide decent amount of incomes. And as you noted with those companies you listed, some of them have more aerospace, some of them are more defense. We do like Raytheon in a couple strategies, but we also like Lockheed Martin elsewhere. L3Harris is another, and even a small company like Kratos, which specializes in drone technology, is a favorite of ours in the growth strategy. So we do believe that this world, unfortunately, is not going to become safer anytime soon. And so we do think that these defense companies that have leading edge technology are likely to remain a solid part of a portfolio for many years to come.
All right, Joanne, have to leave it there. Always great to spend some time with you. Our thanks, of course, to Joanne Feeney of Advisors Capital. Meanwhile, let's take a check on futures right now because the S&P 500 dipping into the red pre-market, as you can see, currently down about 0.1%. Even more so if you take a look at the NASDAQ 100. The Russell 2000 just about flat. I will say we're coming off of 8 straight days of gains, like we've said, longest streak since November 2023. So some of that enthusiasm drying up a little bit here. Let's look under the hood, though. We're going to do that with Abigail Doolittle.
And one stock, Katie, trying to fight that small decline for the S&P 500. The shares of Tesla right now up about 1% off of their pre-market highs, but this gain coming on the news that the EU is proposing a 9% tariff on EVs, Tesla EVs produced in China, which is significantly lower than the tariffs proposed for some of the Chinese-based EV makers. In addition, this is just about 20% of their overall production in the world. So investors cheering this news as a positive. Take a look at the shares of Palo Alto Network, which you all were just talking about. The stock is up nicely, up about 2.4% now, up more than 20% off the recent lows. And of course, they beat, they boosted, the billings were better. They also boosted the buyback. And Morgan Stanley saying AI tailwinds and easy comps are ahead, that this is a stock to be bought. And then finally, the shares of Boeing, not so much. The stock is right now down 1.3%. They've halted their 777X test flights over cracks in the part that connects the big GE engines to wings. Doesn't sound very promising. Some analysts are saying that this delay could halt the delivery of this plane all the way out to 2026, Matt.
You do want to keep the engine on the wing. That's
Absolutely.
a critical part of flying a commercial aircraft. Abigail Doolittle, thanks very much for that. Coming up, Lowe's cutting its guidance thanks to a softer housing market. We'll have the DIY lowdown next. This is Bloomberg.
I think this will probably go down in history as one of, if not the largest financial crimes ever.
I cannot imagine a scenario where $8 billion just disappears.
Bankman-Fried has pled not guilty to multiple fraud charges.
Sam was just too important in the crypto community.
When someone says, I'm going to give $1 billion in the next 2 years, like that catches everybody's attention.
As time went on, their ideas got like weirder and weirder.
I don't think he even had almost a conception at some point that it was wrong or right. I think he just had the mentality that he has to win.
This committee will not stop until we uncover the full truth behind the collapse of FTX.
Sue, Mark.
Are you in? I'm in.
I'm in.
We're in.
Will this be the last of its kind? No. This is the nature of capitalism. Get over it.
Bloomberg covers the world with unmatched reach and resources. From more than 120 countries, the moment news breaks, 24 hours a day. Bloomberg, context changes everything.
This is High Interest, to look at what's making headlines around the world. President Biden called on Democrats to rally behind Kamala Harris in his farewell speech on the first night of the DNC. Biden said selecting Harris as his VP was the best decision I made in my whole career. We'll be live at the DNC in Chicago for more in the next hour. The chief technology officer of Goldman Sachs is the latest to leave the Wall Street bank for Ken Griffin's hedge fund Citadel. Firms like Citadel and its rivals have been digging deeper into their wallets to poach top talent from the big banks. Citadel is a popular destination for Goldman veterans. One person is confirmed dead and 6 others are missing after a super yacht sank off the coast of Sicily early yesterday following a violent storm. British tech tycoon Mike Lynch, who was recently acquitted from a U.S. criminal fraud charge, and Morgan Stanley International Chair Jonathan Bloomer are among the missing. Katie?
All right, let's turn back to earnings season now, and specifically home improvement giant Lowe's. The company lowering its full-year guidance, saying that the frozen housing market is keeping consumers on the sidelines. Joining us now is Drew Redding. He is senior home builders analyst for Bloomberg Intelligence. He joins us now, and we kind of knew that sales were going to be weak. Home Depot all but told us that last week, but there was some good news to be found. You told us in the commercial break when you look at the margin front, especially.
Yeah, there was some concern last quarter with a weaker than expected gross margin performance. A lot of that had to do with the promotional environment, but it was a nice beat this quarter, so the margins remain strong. And I think, one of the key investment thesis for Lowe's over the last couple of years has been their ability to drive higher operating margin. Their ability to kind of close that gap with Home Depot has really driven the story. And the fact that they're able to kind of sustain their margins in this environment where you have sales down, I think is something that investors will latch onto.
It's interesting because anyone who works on their homes know that there's pretty intense rivalry here. There are Lowe's people and there are Home Depot people. You had mentioned that they had been able to catch up a little bit. What is it that they're doing differently? How expensive are those investments in terms of being able to be competitive with their large rival?
Yeah, so the main difference between the two retailers from a customer base is the exposure to do-it-yourself versus professional contractors. Lowe's has been under-indexed to the professional contractor market. It's only about 25 to 30% of revenue versus about 50% to Home Depot. So that's really one of the factors that's driven Home Depot's outperformance on the top line versus Lowe's. That being said, over the last couple of years, they've really put an emphasis on turning their attention back to that professional contractor market. And they've been doing that through, attacking the basics, making sure they have the right brands, the right in-stock levels, the appropriate service levels for their pro customers, including job site delivery and things like that. So they've gained a lot of that low-hanging fruit. So they've made really strong inroads, and that's what you've seen in the results. We even heard it this quarter where total company sales were down about 5%, but we did see a mid-single-digit increase among those professional contractors.
In the last 5 years, we've seen Lowe's shares up 150%, Drew, and Home Depot is only up about 67%. Why is Lowe's outperforming so much over a 5-year time period?
Yeah, as I mentioned, Lowe's has been a turnaround story really since 2018 when we got new management coming in. And a lot of that really, as I mentioned, had to do with kind of focusing back, as they call it, the retail fundamentals. So they had been under-invested in the professional contractor market. They had an online business which was outdated and not up to par. They've really invested in both of these areas, and that's supported by the investments they've made in their supply chain. So they've really gone after the pieces of the business that were lagging. They've made the appropriate adjustments, and that's why you're seeing operational performance improve as well as the stock price.
Fascinating. Even with the run-up, Lowe's still less than half the market cap here of Home Depot. Drew, thank you so much for your time. That is Drew Reading of Bloomberg Intelligence. Now, coming up, Eli Lilly says its weight loss drug helps people with obesity avoid diabetes. We're going to give you details of that next. Social Climbers up next. This is Bloomberg.
It's a multi-trillion-dollar industry. We'll show you what's happening in ETFs like no one else. Bloomberg ETF IQ, Monday on Bloomberg. Bloomberg Surveillance covers the latest in global markets and the political events that influence your world. Join Jonathan Farrell, Lisa Abramowitz, and Anne-Marie Hordern only on Bloomberg. Context changes everything.
Morning, this is Bloomberg Daybreak Europe. I'm Tom McKenzie in London. These are the stories that set your agenda.
Taking you from the U.S. market's close to the overnight session in Asia. We'll walk you through what you need to know to kickstart the European trading day. Live from our European headquarters, we bring you the day's top market-moving stories, unmatched expert analysis, and on-the-ground reporting from across the continent. Tune in every weekday at 6 a.m. London time, only on Bloomberg Television.
DOJ or other authorities
could face bigger challenges next.
Was going to keep rain World Cup. This is a three
As the economic picture
covering the intersections of Hollywood, Silicon Valley, and beyond.
Well, a new study out today shows that Eli Lilly's popular weight loss shot may play a significant role in fighting diabetes. The 3-year trial showed that Zepbound slashed the risk of patients developing type 2 diabetes by 94%. For more, I'm pleased to say we're joined now by Bloomberg Health reporter Madison Muller. And I actually want to start on the fact that this was a 3-year study. I mean, this has only been talked about in popular culture, these weight loss drugs, feels like for the past year and a half. This has to be one of the longest ones out there.
Yeah, this is definitely the longest study of Zepbound so far. And so we got some early results 72 weeks in that were published in a medical journal from this same study. And what Lilly did was continue to enroll patients with prediabetes for another 2 years to see what happened to their, in terms of developing diabetes and also in terms of weight loss over that time.
So much of these drugs, the potential of them here, Madison, is about what they can do besides their initial use. How does this really set up Eli Lilly versus its rivals, particularly Novo Nordisk?
Exactly. This study just provides more evidence that there are long-term benefits to treating obesity. And Novo Nordisk has done some bigger studies in patients with heart disease that showed that their drug Wegovy cut the risk of heart attacks and strokes by 20%. Lilly has not done a study, or they're in the midst of doing an outcome study like that right now. So in the interim, this type of data that Lilly is doing in prediabetes and in sleep apnea and some other studies kind of are proof that their drug does have these longer term health benefits.
I mean, I'm a person who wants to avoid obesity, heart disease, diabetes, and Alzheimer's. 20% is pretty good. 94% is a lot of percent, right?
Yeah. And I mean, when you think about it, weight loss does, and keeping your weight at a healthy level does help prevent diabetes. These drugs are also known to help control blood sugar. So it makes sense that in a study like this, people wouldn't be developing diabetes. Like, that's sort of what these drugs are supposed to do. And it just, I guess, comes down to the question now of, like, is it cost effective to have all these people to prevent diabetes on a drug that costs $1,000 a month?
Right, but $1,000 a month is better than what you would be spending if you, had a heart attack, a stroke, and diabetes. Plus, I think Alzheimer's is really the wild card in there. Madison, great reporting. Thanks so much for joining us. Bloomberg's Madison Muller covers these wonder drugs, or potentially wonder drugs. A check quickly on futures. After 8 days of gains, we see a flat picture on the S&P 500. NASDAQ 100 futures are down 0.2%. We'll be back with the market open. This is Bloomberg.
make sure that we're exposed to categories that continue to be relevant to consumers, that we're positioned in categories where we have a competitive right to win.
By strategically adding and shedding assets, General Mills has turned over about 20% of its net sales base in the last 6 years. It's dramatically expanded its pet food platform, starting with the purchase of Blue Buffalo pet products in 2018. That expansion dovetailed with a boom in demand.
Pet in the U.S., pet feeding and treating, is a $50 billion category. It's almost 5 times the size of a category like cereal.
Is this the future of the company? I mean, we so much associate General Mills with breakfast and cereals, human breakfast and human cereals. Are we now going to be thinking about General Mills much more as a pet food company?
I think you'll be thinking about General Mills as a food company where we treat all the members of the family like family.
The humanization of pets is actually the biggest driver of pet food and pet treating growth. It has derivatives in not only feeding, which is the core thing that most households where most of the dollars go against the pet, but treating. And then you start to branch out to things like vitamins and minerals and supplements.
People really love their pets. They want to take care of their pets like they do their family, and it really is a global phenomenon. That's why we recently entered the China market with Blue Buffalo. That's why we bought Edgar & Cooper recently in Europe, because we see the same kinds of trends that have played out here in the U.S. playing out all over the world.
Just about 25 seconds until the start of the cash trade. We're looking at futures right now that are flat, but we've had 8 days in a row of gains. That's the longest winning streak since 2003. You can see the S&P futures right now down about 0.1%. The cash trade could change at least a tenth of a percent from there. NASDAQ futures down about 0.2%. You hear the opening bells. You're going to see Juniper Networks ringing the bell at the New York Stock Exchange right now. Over on the NASDAQ, SunPower ringing the opening bell. Sorry, Sunrun ringing the opening bell. And we're going to hear from SunPower, and we're going to talk to some energy CEOs later on in this program. So interesting to focus there on solar. In terms of the major averages and what they're doing right this minute, let's get over to Katie Greifeld for a check at the open. Katie?
Small moves so far. The S&P 500 down just 0.1%. But if there's red behind me, that means the streak is over, at least for now when it comes to the S&P 500. Of course, coming off of 8 straight days of gains. Same thing, too, if you take a look at the NASDAQ 100. If you take a look at your small caps as well, down about 0.2%. Of course, there's a lot of catalysts to get to this week, from politics to Jackson Hole to earnings. And on that note, let's take a look at Amer Sports. It's the maker of Wilson tennis rackets and outdoor apparel. Handily beat second quarter estimates, boosted its full year profit forecast. You can see boosting shares right now, currently up about 9%, Shanali.
Also keeping an eye here on Eli Lilly. The company's Zepbound weight loss shot cut the risk of obese patients developing diabetes by 94% in a 3-year study. Eli Lilly up now 1.2%.
All right, we're also watching Tesla right now. The EU is planning to hit Tesla with a 9% tariff on EVs imported from China. That's fairly low compared to what they're looking at other Chinese competitors. Let's get over to Abigail Doolittle. She's got a look at the stock for us. Abby?
It is absolutely low, and the stock is liking it a lot. Now, this is a 4-day look of Tesla, but you can see over the last 4 days up more than 10% off of its recent low a couple of months ago, up more than 60%. Still down on the year, though, so some real volatility. But in terms of today's gain, up about 1.5%, having to do with the fact that that tariff, as you mentioned, from the EU for Chinese-produced EVs, much less than some of the Chinese companies themselves. Let's take a look at the comparison, and we'll see just how attractive 9% is. So for SAIC, they're proposing a 36.3% tariff. Geely, almost 20%. Build Your Dreams, 17%. And there's Tesla 9%. Now, what's interesting here is right now China's about 20% of their production value. But if we go into the Bloomberg terminal and take a look at overall production, this is EU and US. And you can see in 2023, it was about half of the world's overall production, more than 700,000 vehicles. You can see, though, over the next few years, Matt, or Katie, this is expected to stay right around even, suggesting that Chinese production could, in fact, fill in as overall production rises, meaning that 9% tariff, that it's smaller than the other tariffs, is definitely an important thing for Tesla.
All right, Tesla shares currently up about 2% or so, but boy, it has been a tough year. Abigail Doolittle, thank you so much. Let's broaden out this conversation now as stocks start to struggle this morning, because joining us at the desk, I'm pleased to say, we have Amy Kong. She is partner and wealth advisor over at Corient. Great to see you in person.
Thank you.
I'm going to go to the first line of your second quarter investment outlook. Of course, we're in the third quarter now, but this stuck out to me. Periods of greater volatility could uncover attractive opportunities. We've absolutely seen a period of greater volatility. What opportunities has that brought to the surface?
Yeah, sure. I appreciate that question, Katie. I think ultimately volatility could be scary in the short run, but in essence, it could create some pockets where stocks are trading off for reasons that are not necessarily fundamental. And we haven't quite seen that just yet. I know you mentioned volatility picked up a little bit, but unfortunately it's been more short-lived. We had a little bit of a glimpse of that a couple of weeks ago. But certainly the excitement that we've seen following the fact that the Fed is closer to a cut in a couple of weeks, earnings remain in reasonable shape. I think, unfortunately, that pocket, if you would, of opportunity was not very long-lived. But certainly we are seeing some broadening out of the 493 companies that have done better in recent days. And that's great, because we want to make sure that, again, this broadening of the rally is sustainable and it's not just clustered around the Mag 7. So we are starting to see some opportunities amongst the other non-mega cap names out there.
What kind of rebalancing do you want to do? I mean, there's both ends of the spectrum. You can take profits, obviously, from your big winners, or you can do some tax loss harvesting. What are you recommending?
It's a little bit of both. I think ultimately, considering that the Mag 7 names have done so well in the last 18 months plus, there is likely to be some tax loss harvesting. And we have seen some companies, whether, for example, if they are announcing layoffs or guidance is lower, we're seeing a little bit of a pullback in certain cases. I think ultimately there's likely to be some profit taking as well, because we're kind of hitting this point in the path where companies have raised prices and they're kind of getting some pushback from consumers. They've pulled enough levers to control expenses, and they're hitting that point where what is next? And so you are starting to see a divergence, whether it's whatever consumers are spending or how companies are reporting their earnings. So again, those types of opportunities, if you would, allow us to either take profits or take some losses where appropriate.
Let's talk more about the broadening here, because about a month or two ago, you had that small cap bid. The Russell 2000 rose 10% in July. It's fallen almost 4% in August. People are looking to the S&P 600. They're looking to S&P equal weight. How do you play that broadening story?
Yeah, so small cap certainly did have its day in the sun, if you would, a couple of weeks ago, and that's likely due to some of the excitement that we're seeing with regards to the Fed and potential rate cuts. We're certainly getting closer to that point in the coming weeks. But really looking at the Fed futures today, the market is expecting still about 3 cuts for 2024 calendar year. And so for small caps to continue its uptick, if you would, you probably have to expect more than that. And I think a lot of that is discounted in again, that rally that we've seen in the small cap space. My personal view is stay with fundamentals, stay with quality in this kind of market. Know what you're invested in, and it doesn't necessarily have to be in small cap or a certain style. Looking at individual companies and understanding, as I've mentioned before, how are they dealing with the ability to raise prices if they can still? How can they still maintain profits or even increase it in this kind of market? I think, to me, that continues to be a very important discipline.
Well, with that focus on the fundamentals, that kind of goes back to your first point, that when it comes to volatility, you're looking for the volatility that creates that turbulence without actually altering the fundamentals. And if we do a post-mortem on the carry trade unwind, for example, which caused the last 2 weeks of volatility, that seems like it fits the bill, that it's that kind of episode that really creates pockets where you can actually go in and buy some stocks on sale.
Yeah, absolutely. I think that's a great point, and I really appreciate that. You absolutely have a lot of macro factors, whether it's stocks that carry trade, whether it's headlines with regards to how many cuts, when the cuts will start to happen, coming into the picture. Don't forget the political season is obviously heating up quite a bit. And so there's a lot of different macro headlines that is impacting the markets, and stock prices are reacting to that. Again, not necessarily due to fundamental reasons. To us, that gives us an opportunity to add to ideas where we like them and necessarily want to find a better entry point. Again, the main discipline, if I may repeat, is finding companies that have that make sense in this environment. Number one, that can certainly do well if rates were to come down. That's, quite frankly, I'm doing a lot of thinking on what companies may do well in a lower interest rate environment. And so, again, looking at the broad universe out there, but not necessarily focused on the mega caps that have done very well. We're trying to find companies that don't necessarily fall into tech, but can still fit the bill, whether it comes from, again, the environment that we're talking about.
By the way, it's that forward planning that's so key, right? Because we think of it as 2 weeks of volatility. Really, it was only 2 days of volatility. And if you didn't...
And then we talked about it for 2
Exactly. I mean, the VIX is back down at 14, right? If you weren't ready on, that Friday of the non-farm payrolls or Sunday into Monday, you kind of lost your moment. How do you prepare yourself for those moments?
It's a good question. I think a lot of the research that we do, or I do in general, it's very long-term in nature, and so we're ready to pounce when there is...
Do you set cash aside? I mean, how do you have enough dry powder?
Yeah, I think that's exactly it. There is some cash on the sidelines. What I've been doing too in client portfolios is shifting a little bit away from stocks into bonds and cash. Again, given this rally that we have seen. For the past decade, we have not been able to say that bonds is a good area to be in. We can actually say that now. I know yields have come in, but still, again, relatively speaking, you do have a parking spot, and cash is still a parking spot. So in essence, there's been dry powder, to your point.
Do you play fixed income through the ETF market, almost like equity-like instruments here for ease of access?
No, we don't. I personally do not use those instruments to play the market or volatility. Again, we're long-term investors. We try to, again, look for trends. Again, the AI trend could be one. Again, if rates are coming down, how far do they come down and what companies can do well? Those are the types of longer-term mega trends that I would focus more attention towards.
Amy, thanks so much for joining us. Great to have you here in the studio. Amy Kong there of Corient. Coming up, Alaska Air and Hawaiian Air are a step closer to finalizing their tie-up so you can fly from Honolulu to Anchorage more easily. More on that deal next. This is Bloomberg.
Names and global leadership are on Bloomberg.
China has started to provide Russia with different types of aid, not direct military aid, but issues linked to energy, sometimes even dual use of goods. I argue that Russia is so dependent on China right now that one phone call from President Xi Jinping would solve this crisis. If he were to say, time to start negotiating peace, Russia would be forced to do that. They would have no other choice.
I would like China to play a serious role. Russia really depends on it because they don't have another place to export many of their goods because of the sanctions. The president of Finland, he is right. China could play a tremendous role without weapons.
Nobody covers the top global leaders like Bloomberg Television and Radio. Context changes everything. Welcome to the world of decentralized finance.
We thought we'd take a look at Bitcoin versus the S&P 500.
Bloomberg's covering all things crypto, the people.
The tectonic shift emanating from Washington.
It's really a tale of two cities in crypto.
Crypto shouldn't be partisan.
The transactions.
Really a record-breaking moment.
Crypto VC is back.
And the technology.
It's really the beginning of a global on-chain economy.
And if America doesn't embrace it, we're going to be left behind.
Bloomberg Crypto, only on Bloomberg. It's the world's second largest economy with a growing influence in global affairs. But geopolitical uncertainties, deflationary pressures, and questions about foreign investment linger. Bloomberg, the China Show, brings you the unmatched expertise you need to keep track of breaking news, in-depth market analysis, and the most influential newsmakers in and around China. Bloomberg, the China Show. Weekdays around the world right here on Bloomberg. Context changes everything.
This is Bloomberg Open Interests. I'm Matt Miller. Let's get a quick check at what's going on in stocks right now. We're seeing green arrows again. They're very slight, but the S&P 500 is up 0.04%. The NASDAQ up 0.03%. The small caps are still down, but if we see gains, Katie, we would see 9 days in a row of gains. That would be the longest streak since 2004.
All right, so stay tuned on that one. But for now, it's time for our top calls. Some of the analyst action in focus this morning. And first up, Evercore ISI double upgrading Vornado Realty to a buy. The analyst says that the stock has been outperforming the REIT index after reporting strong second quarter results. He remains optimistic that it will keep that momentum going. Next up, we have Citi saying that the education technology company Stride no longer a buy. The analyst cites an elevated valuation and uncertainty surrounding its full-year guidance. And finally, JP Morgan says Alight is no longer a buy as well. The HR management company reported earnings and sales that missed estimates earlier this month. You can see shares down about 0.5%, Shanali.
And Katie, the nearly $2 billion merger between Alaska Air and Hawaiian is now one step closer to reality. This is after the Department of Justice decided not to challenge it. We're now joined by George Ferguson from Bloomberg Intelligence, and of course you're seeing shares really reacting to the potential of now this deal not hitting so much resistance. When you look at this Department of Justice, how they've treated the airline industry with mergers, blocking that Spirit deal just months ago, really, why are they so okay with this one?
Yeah, I mean, I thought they frankly should have been okay with the Spirit deal as well. They're all these airlines are small airlines, you know, not any of the top 4 airlines. You know, Alaska's really a carrier into long haul into Asia, and I would call it shorter haul, but still a pretty decent length into the West Coast of the U.S. You know, I think the Southwest has gotten into Hawaii recently. They're increasing competition there. So I think the competition fear should be assuaged a bit there. And again, I don't see this as a big player in the U.S. airline business. And you're coupling it with Alaska, which is really a West Coast U.S. And a bit of sort of, you know, Mexico airline. So to me, there's just no big, you know, hurt to the consumer, I guess, if I put it that way.
How much of this, George, is also a hurt to U.S. businesses? I mean, are they realizing that such strong regulation is starting to hurt corporate America?
I mean, I think you do have an airline here, Hawaiian, that was in trouble when Alaska came in to try to help it out, right? It's some of its core markets like Japan, seeing a lot less demand due to the strength of the yen. There were the wildfires and such. And so, yeah, I think if DOJ gets in the way here, you could even see a potential failure of this airline. So I think that, you know, that might that is a bit of a hurt to corporate America. So.
Well, that's what I was wondering. If this doesn't go through, of course, Hawaiian rallying big time right now. If this doesn't go through, where does this leave Hawaiian? If you take a look at the example of Spirit, for example, of course, Spirit takeover attempts were ultimately blocked. And you think about Spirit right now, it's definitely in the doghouse.
Yeah, I mean, Hawaiian is loss-making right now because of those wildfires, because of the increased competition. So there's a lot of risk that if this didn't go through, that Hawaiian would need some sort of at least restructuring. And so, again, that's why I think it's super positive for Hawaiian. I don't know that, on a big sort of putting two airlines together synergistic level, that there's a lot here, right? You're going to basically take Alaska, expand it westward into Hawaii, a really great, vacation spot. They had already had some routes there, and then you're going to add long haul to it, which adds some complexity to a very efficient Alaska, which was all short haul, all Boeing 737s. You're going to add long haul airplanes like 787s, flights into Japan, flights into Australia. So it increases the complexity of the airline, but sort of no major players still in the U.S. airline business.
George, I'm glad you brought up Boeing as well, because you have Boeing down more than 2% this morning as well. Boeing pausing flight tests of its 777X jetliner. What are the implications here? You have analysts saying that this could really push delivery expectations potentially into 2026.
Yeah, so the 777X, one of those development programs in Boeing that's really been dragging. Obviously, this doesn't help. When we look at it, it looks like there's some braces on the engine that are broken. This is I think the highest thrust engine ever put on an airplane. So, not unthought of that you would have some problems with some of the braces on the aircraft. Boeing, though, sort of definitely been riddled lately with all kinds of challenges. 777, not a big money maker for Boeing. Small profitability on it. The X will probably have even less profitability. So I think the biggest challenge here is going to be some of those 777s that are already built are going to have to be reworked. They're going to sit in inventory for longer, but not going to be a major challenge to Boeing profitability. And so, because it just doesn't contribute much, will cost some money to rework, but it's a setback. I suspect, though, it's a setback that will be overcome in, months, not years, and again, because of a very big engine on it.
Well, one setback among many, of course, when we're talking about Boeing. George Ferguson, it's always great to speak with you. That is George Ferguson, Senior Airline Analyst for Bloomberg Intelligence. Now, coming up, a new suitor emerges for Paramount Global. We'll talk about what happens now in today's Wall Street beat next. This is Bloomberg.
Earnings.
I know it's like your Super Bowl, right?
I can't wait. It's like opening presents in the morning.
All right, it will be exciting.
Nobody covers earnings like Bloomberg. A lot what's happening on Wall Street.
I couldn't have been more wrong.
It's going to stay volatile for a while longer.
It's a bifurcated market.
Need to catch up?
This is Bloomberg Wall Street Week. I'm David Weston.
We've got the information and insights.
Year over year, you could start to see some cracks.
It might be overhyped short term, but it's underhyped long term.
From businesses most influential and instrumental.
A lot of the doom and gloom has been somewhat overblown.
If you're not living near the edge, you're taking up too much space.
Bloomberg Wall Street Week, only on Bloomberg TV and radio. Context changes everything.
All right, this is Bloomberg Open Interest. I'm Katie Greifeld. Let's take a look at stocks right now. Of course, coming off of an 8-day rally, looks like we could have number 9. Of course, the S&P 500 has been flipping between gains and losses in the 22 minutes that the market has been open. But for right now, for this snapshot in time, the S&P 500 currently up about 0.1%. Same thing, too, if you take a look at big tech, the NASDAQ 100 now in the green. It was in the red, but now up about 0.2%. Russell 2000 index, though, those small caps can't catch a bid. Currently down about 0.3%, Shanali.
Thanks, Katie. It's time now for the Wall Street Beat. Today we're looking at media M&A. Media executive Edgar Bronfman Jr. has formally submitted a $4.3 billion bid to take control of Paramount Global and quash that existing offer from Skydance Media. Here with more details is Geetha Ranganathan, media analyst at Bloomberg Intelligence. And the first order of business here is that Skydance offer was already proved by the company here. So how does this new bid complicate the situation? What chance does Bronfman have?
I don't really think he has much of a chance here, Shanali. So yes, the bid does match some parts of what Skydance had offered in the Paramount transaction. So they're matching the $2.4 billion that Skydance offered for the control of the parent company, which is National Amusements. They're also matching the $1.5 billion cash injection into the balance sheet to basically pay down debt. What Bronfman is suggesting is that there is no dilution in his deal. And the dilution that he's talking about is that Skydance basically forced Paramount to buy the Skydance studio at a fairly high multiple, so paying about $4.75 billion for that studio. That's almost at a 14x EBITDA multiple versus Paramount, which itself, is trading only at about 7 to 8 times. So that was a significant premium. So that's really what Bronfman is betting on. But where we think Skydance still has the edge is that they are offering to buy out at least half of Paramount, shareholders at a $15 price, and that's not something Bronfman has indicated that he would do.
Geetha, why does it matter? I mean, if you buy National Amusements, that's the Redstone family holdings, right? You essentially have voting control of Paramount. You don't need to go and buy out the rest of the shareholders. So why does it matter?
No, it matters because, there are two things here that have to get done, Matt. So one is there is a special committee in place that kind of has to evaluate these offers. And we're looking at, there are two classes of shareholders, as you pointed out, Matt. So obviously you have the Redstones and the Class A shareholders. And there the bid is being matched by Bronfman. But you also have the Class B shareholders. And what these shareholders have been arguing for the longest time is that this whole Skydance situation with Paramount really only benefits one person, and that's Shari Redstone, who controls National Amusements. Ultimately, though, you're right, because there's only one person whose vote really matters in all of this. I mean, the special committee could still approve the Bronfman bid, but if Shari says no, the deal's not going to go through. So she's the one who calls the shots ultimately.
All right, Geetha, thanks very much. I'm sure we'll continue to talk about this story. Geetha Ranganathan there of Bloomberg Intelligence talking to us about the battle now for Paramount. Let's get to the trading diary. This is what you need to be watching this week. The Democratic National Convention continues. Tonight, we're going to hear from former President Barack Obama. We'll probably tune in for that. Toll Brothers will be out with results after the bell. This will be another look at the housing market, albeit the luxury new fab housing market. Tomorrow, retail earnings, Macy's, Target, and TJX all report. Plus, we get Fed minutes, and we round out the week with Fed Chair Jerome Powell speaking on Friday at Jackson Hole. Coming up in the next hour, an interview with Greg Ebel, the CEO of Enbridge. That's at 10:30 a.m. Eastern. This is Bloomberg.
Also an owner, I should have pointed out, of 3 major sports teams.
That's right.
Right? And you're the first woman, as I understand it, the first woman to own 3 major, have stake in 3 major sports teams. Is that right?
Yes, and we'll say African American.
You were approached by the owner then of the, I guess, the Washington Wizards and the Washington Caps about maybe buying the Washington Mystics, which is the women's basketball team. And what did you say?
Well, first of all, Zay Poland. He did come to me and Susan O'Malley, and they said, Abe Poland says, look, I want you to be the face of the Washington Mystics. And I said, what do you mean be the face of? He says, I want you to buy this team. His health was failing. And I have to tell you, and a lot of women can understand this, we never get these opportunities. So that was the first thing that struck me, and I was flattered. I was really flattered. I said, well, Abe, what are the financials on this? And he handed them to me. He says, well, they're not making money. But I was still intrigued about team ownership.
Good morning. This is Bloomberg Surveillance.
Welcome back to the opening trade.
This is Bloomberg Technology.
This is the Asia trade.
You're watching the close. Welcome to Balance of Power.
This is Bloomberg. Get your fixed income fix. Watch Bloomberg Real Yield every Friday right here on Bloomberg. Context changes everything. This is Bloomberg Intelligence with Alex Steele and Paul Sweeney.
The real outperformance has been the U.S. corporate high yield.
Are the companies lean enough? Have they trimmed all the fat?
The semiconductor business is a really cyclical business.
Breaking market headlines and corporate news from across the globe.
Do investors like the M&A that we've seen?
These are 2 big-time blue-chip companies.
The window between the peak and cut changing super fast.
Bloomberg Intelligence with Alex Steele and Paul Sweeney on Bloomberg Radio.
Good Tuesday morning from the Bloomberg Interactive Broker Studio in New York City. To our worldwide audience, we're also streaming live the video thing on YouTube. So head over to youtube.com and search Bloomberg Podcast. That's where you will find us. Kind of red and green on the screen today. Not a lot happening. We're going to check in with Jody Schneider. She's our political news director for Bloomberg Television and Radio. She's out there in D.C. at the, in Chicago at the DNC convention out there. So we'll check in with her. Tesla, I think they're getting some tariffs from the EU if they're bringing the cars in from China. We'll figure out what's going on with those folks. Dryden Pence, CIO at Pence Wealth Management. He's going to join us to give us his market call as the economic eyes turn to Jackson Hole, Wyoming, to see what this Fed's going to do with some of this market-moving news. Right now, let's go to Lisa Mateo, kick everything off with the Bloomberg Business Flash. Lisa.
You got it. And Market Drivers brought to you by IBKR. Financial advisors switch to Interactive Brokers for lowest cost global trading and turnkey custody solutions. No ticket charges, no conflicts of your interest at ibkr.com/RIA. All right, stocks, well, really struggling to make some headway. It comes after the S&P 500 lifted for an 8th day in a row. That's the longest winning streak since 2024. So right now we have the NASDAQ, little change, up about 14 points, 17,891. The Dow, a little change as well, down 38 points, 40,857. We have the S&P 500 up about 0.1%, 6 points at 5,614. We have the 2-year yield, 4.02%, down 4 basis points. The yield on the 10-year, 3.84%, and that's down 3 basis points. Commodities, gold top $2,500 an ounce. We have spot gold right now at $2,529 an ounce. Over to oil, Brent crude, $78 a barrel. WTI crude, $75 a barrel. And a big move for Apple, trying to diversify beyond China. Sources saying the company is going to make its first India-made iPhone Pro models this year. And Foxconn, they will begin assembling those new devices within weeks of their global launch this fall. Right now, Apple shares up about 0.2%. That is your Bloomberg Business Flash. Paul and Alex.
All right, thanks so much, Lisa Mateo. I'm Alex Steele alongside Paul Sweeney. Hi, guys. It's my Monday.
Yes, I know. Well, that's how you roll.
That's how I roll. You know, stuck in Maine, can't get through. Apparently, there's a storm in New York.
Well, Anne-Marie Horton just left today for Chicago. She was supposed to be out there like Sunday.
So things were even delayed on Sunday.
Yeah.
So my choice to drive 7 hours rather than try a flight was probably a good idea.
Good call.
Okay. All right, I'll take that.
Yep.
You know, you guys might say it's a little boring in the market. Normally, I would too. But if I just, say goodbye to equities for a second, the dollar continuing to fall here.
Yep.
The reports that maybe the dollar's being now used in a carry trade, I find that kind of interesting.
Really? I haven't seen that. Interesting.
Yep.
Okay.
I mean, and then with the downside potential there as well. And also just the fact that we continue to grind higher, like is the pain trade now just higher equities?
Right. I don't know. I mean, it's, we were 8 days in a row coming into today.
Yeah.
Pretty solid performance. The best so far in 2024. I guess we'll hear from the folks out in Jackson Hole later this week about what the Fed wants to do. But the earnings, you look back on the earnings, that was a pretty solid quarter.
Mm-hmm. Yep. And some of them coming in solid, some of them coming in light. Just look at Lowe's. But let's get more on that with Bailey Lipschultz, Bloomberg Senior Equities reporter. You're taking a look at Palo Alto.
Palo
with earnings. Tell us about it.
Networks, Alex. Beating expectations, top and bottom line. Back to levels not seen since February when it had a disastrous report, really spooked a number of investors, really kind of laying out what they call as the platformatization. I practice that way too many times, which is their platform approach to cybersecurity. They're kind of beating the drum that when they are enabling companies to have some services for free or at a discount to try to drive more growth, that's actually playing out as opposed to kind of an a la carte approach. So analysts really saying top and bottom line beating expectations, strong results. Big focus will be going forward on the next generation security business. Again, we've seen some beats, some misses across the cybersecurity space in the wake of the CrowdStrike snafu, if you will. But Palo Alto up 6.5% right now, ticker PANW.
Very nice.
And that is based in Santa Clara, California, where my youngest goes to college out there. I say, dude, you've got to get into the tech space. Every single company we talk about on this program is based in Santa Clara, California. That's where talk about Silicon Valley.
Let's go to some airlines here. So Alaska Airways and Hawaiian. This seems to be going better than maybe everyone thought.
A lot of investors were scared that the roughly $1.9 billion takeover Alaska Airlines acquiring Hawaiian Holdings would be pushed back by regulators. U.S. Department of Justice, though, ending its antitrust probe after a months-long review. So that deal struck a number of months ago. Will potentially move forward now. Department of Transportation is the next real body that could stand in the way, but companies really saying that they expect kind of a green light from there. So at the terms of the deal, Alaska will pay $18 a share, valuing the company at $1.9 billion right now, trading at $17.69. So 31 cents there, kind of to be squeezed out over the coming days and weeks, I guess, assuming that Department of Transportation approval. But a big move higher in Hawaiian Holdings. Again, this is in the wake of a lot of FTC issues, a lot of DOJ concerns in the airline space and in other areas. So this one, finally, it seems like moving towards the end.
Yeah, this surprised me. I'm looking at the Bloomberg reporting here, Bloomberg News reporting. The decision is an abrupt change of course for the Justice Department, which carried out the Biden administration's pro-competition stance by blocking a merger between JetBlue Airways and Spirit, and forcing the breakup of regional partnership between JetBlue and American Airlines since the beginning of last year. So this is an about-face. I think they're recognizing that if we don't let these small airlines get together, they're going away. And that doesn't hurt the people in New York or Atlanta or Chicago. It's everybody else in the second and third tier markets.
So either JetBlue's like, come on, man, couldn't you figure that out when I was trying to do this? Or there's just less overlap between Hawaiian Airlines and Alaskan Airlines, and therefore it's a little bit easier. All right, let's stay with planes for a sec. Boeing.
Boeing down 3% this coming.
Now
another issue. This is the 777X. So Bloomberg reporting that the company has paused flight tests of that 777X jetliner as it inspects cracks in a crucial structural component that connects the hulking General Electric engines to the plane's wings. Guys, I don't know about you. I don't know if I want to be on a plane that has cracks holding the engine in place. This is a huge plane, though. Just a quick Google search. Can typically seat between 395 and 426 passengers.
Yeah.
Has a range of up to 8,700 nautical miles.
You can take that bad boy anywhere. I mean, if I were a portfolio manager, I would be just waiting to pull the trigger on buying a big slug of Boeing. But every time you think about it, that the worst is past, another headline.
I know it. I mean, if you do it, you're going to have to just buy it and hold it for a while and just wait for all the bad news to flush its way out. All right, Bailey, we appreciate it. Just in case you're wondering, he's not wearing a bro vest. He subbed for you on Friday and also didn't wear it. He wore a suit jacket.
Really?
Yeah.
Wow. Maybe
I'll be back at 11 and have a suit jacket. I'll let you know that right now.
We'll keep updated on his fashion sense. Bailey Lipschultz, Bloomberg senior equities reporter, joining us. The other piece of news, of course, is the Democratic National Convention. U.S. President Joe Biden delivered a valedictory address at the Democratic National Committee convention yesterday in Chicago. And during his keynote address, President Biden passed the torch to Vice President and U.S. Democratic presidential nominee, Kamala Harris.
Selecting Kamala was the very first decision I made when I became our nominee. And it was the best decision I made my whole career.
Jody Schneider, political news director for Bloomberg TV and Radio, is joining us. It was quite a sight yesterday, to say the least. He spoke really late, too. I'm not going to lie to you. I was definitely still asleep. But, you know, when I catch up today, it was definitely quite a sight. What was your takeaway from day one, and what's your focus for today?
Yeah, well, thank you. And it was, I think the phrasing you just used, the valedictory speech from Joe Biden is a good way to phrase it. He was, you know, they said it wasn't necessarily going to be a farewell. He still has 5 months left as president, but it did have a feel that way, talking about what he had done and then adding what he had done and always adding, and Kamala Harris, the vice president with him. It was definitely passing the torch, him standing behind her and talking a little bit about this, you know, how this was difficult, but he did it for his country, he said. He loved being president, but he loved his country more. So, you know, really leaning into that, it's time for someone else, and leaning into her being the best person to take over. It did very well. There was, you know, a lot of enthusiasm. Was late. There was some, you know, it was difficult to get through security. Everything was sort of late yesterday, but there was a lot of support and enthusiasm, and it seemed to be the right kind of way to do this, to have him early in the week, Monday night, you know, and her speech is Thursday night, separate them, but have her there. She and the vice presidential candidate, Tim Walz, and their spouses were there. They will then go today to campaign in Wisconsin. Then they'll come back for their speeches. So there's kind of a very definite sort of that passing of the torch feel to it. There were a lot of other speeches. Hillary Clinton was an emotional speech, but there will be certainly more tonight.
So, Jody, I'm just thinking back to maybe, I don't know, 2 or 3 weeks ago. What a turnaround for the Democratic Party in terms of just level of enthusiasm. And you saw it on, I guess, full display last night. What is the level of enthusiasm among Democrats in Chicago today?
Yeah, there's a lot of enthusiasm. And you're right, Paul, very relieved also that this has gone so well. It's only been a month since President Biden as the nominee. It would have been a very different convention. There was a lot of pent-up enthusiasm for something different, and they're all very relieved also that this has gone so well. It's only been a month since President Biden announced he was exiting the race. They've been able to fundraise well. They've been able to pass the torch very smoothly to Kamala Harris. There hasn't been, kind of an open convention, complications. They've really, there's a sense of palpable relief that they're able to have this kind of convention when it could have gone very differently from that for them.
Jody, before we let you go, what's the protest situation like?
Yeah, there were protesters here. The counts always vary. The protesters always tell you there's more of them, and the authorities say there's fewer. But there were thousands of people protesting, mostly pro-Palestinian protesters. There's a ton of security here, police from all over the Midwest. It seems there weren't a ton of disruptions. There was some at the site, but they seem to have dealt with that. So while there's a lot of protesters, it seems it's being dealt with, at least so far, without violent situations.
All right, Jody, thank you so much for joining us. Really appreciate it. Jody Schneider, she's political news director for Bloomberg Television Radio. She joins us remotely from Chicago, Illinois. She's based in D.C., but she's out there at the Democratic National Convention, so we'll appreciate getting her reporting here. Let's go to Tesla. The stock's pretty much unchanged today. It's down about 10% year to date. It's flat over the trailing 12 months. Looks like the EU is looking to slap some tariffs on some of these Tesla vehicles that are made in China. Is this a big deal? The market doesn't seem to think so. The stock's not doing a whole lot here. Craig Trudell joins us, Global Autos Editor for Bloomberg News, joining us from London via Zoom. Craig, what's the latest coming out of the EU here as it relates to Tesla?
Yeah, this is a case of Tesla having a bit of a special situation where other manufacturers are subject to tariffs on the basis and in part of whether or not they cooperated with the EU's investigation of just how much they were subsidized by the Chinese government. And what the EU did here was they sampled a few companies and sort of took a specific look at a few manufacturers and made decisions based on what they found and on whether or not those companies complied with those investigations. And some separate rates were going to be applied to companies that were not sampled. What Tesla did was go to Brussels and say, look, we don't think that we were subsidized as much as some of the other guys, so subject us to a lower duty rate. And that's what happened here. So they're subject to a 9% tariff. BYD, on the other hand, an additional 17%. All of these rates are on top of the existing 10% that cars coming in from China face when they are shipped into the EU. And so I guess, if I'm an investor, I sort of knew that this was coming, had a sense that Tesla, there was a potential for, a slightly more lenient treatment. But in the end, am I happy about Model 3s being subject to 19% duties, coming in from Shanghai? Probably not.
Does this mean that Elon Musk will want to manufacture more Teslas in Germany then, or is he just going to cut bait?
I think it's a really interesting question. I mean, the Model Y is far and away, the model for Tesla globally, and I think increasingly so. Even as the company has, given a little bit of a facelift to the Model 3, the Y is really, the volume play for them, and they make those in Germany. It wouldn't be a cinch to add Model 3 to the plant in Germany, but does it make a lot more sense to build that vehicle there as opposed to shipping it in from China? It may be in their best interest to do so. The 19% duty is substantial enough to where it certainly has to make the math much more interesting in terms of whether or not they decide to pull that trigger.
So from the EU's perspective here, is this a Tesla issue or is this just a China issue? Because I know they've got tariffs on other Chinese manufacturers as well.
Yeah, I think the reason that Tesla is sort of being led with today and how this is getting covered is Tesla was sort of separate from everybody else, looking to be assessed on its own Whereas all the other manufacturers, the duty rates were known. Tesla was still a little bit of a mystery. So this is, sort of one more sort of checked box in terms of, what the particulars are going to be for these duties that go into effect later this year. And I think this is very sort of par for the course for anything that gets decided by the European Commission. It gets decided over and over and over again. And so this is very much a broader China story and not Tesla specific.
Do Tesla EVs that are manufactured in China even make it into the EU and to that point into the US or no?
Yeah, all the Model 3s that are sold in Europe are coming from Shanghai at the moment, and so whether or not the company maybe perhaps they would potentially look at exporting from the U.S. I don't think we have a good enough sense of the particulars of their cost base to really sort of be able to say what makes the most sense for them sort of immediately as a result of this change in tariffs that will go into place. But it has been interesting that we have seen the company, even before these tariffs actually take effect, bump up their prices in Europe a little bit. And you've maybe seen that result in some challenges for them sales-wise, where they've not had a very good start to the year, and that's even carried into the second half, where the initial sales results that we've seen for Tesla have not been particularly good. I think the fact that they've not been able to continue to bring prices down and have sort of been unsure whether or not all of the Model 3s that they're shipping into the EU from China may be subject to these tariffs. It has been absolutely a headwind for them.
All right, Craig, thanks so much for joining us. Really appreciate it. Craig Trudell, a global autos editor for Bloomberg News, joining us from London, the Q headquarters there in London. Coming up, we're going to check in with Sam Fazeli, Bloomberg Intelligence. He's a director of research for global industries, and he's a senior pharmaceuticals analyst. Eli Lilly's Zepbound cuts risk of diabetes by 94% in obese people. Pretty good there. That's coming up. This is Bloomberg.
markets, headlines, and breaking news 24 hours a day on Bloomberg Radio, Bloomberg Television, and the Bloomberg Business app. This is a Bloomberg Business Flash.
From the Bloomberg Interactive Broker Studio, I'm Lisa Mateo. Stocks, well, I guess you could say we're taking a little bit of a breather after that rally that drove the market closer to its all-time highs. Right now, the NASDAQ down 0.1%, 33 points, 17,843. The Dow down 0.2%, 81 points, 40,813. We have the S&P 500 down 0.1%, 6 points at 5,602. The two-year yield at 4.01%, that's down 5 basis points. The yield on the 10-year, 3.83%, that's down 4 basis points. To currencies, we have the dollar weaker, Japanese yen stronger, up about 0.4% at 145.93 against the dollar. The euro, British pound stronger. We have Bitcoin up more than 1.5% at 59,000. Not much activity on the economic calendar for today. Tomorrow, we get a read on mortgage applications for last week. Thursday, on to initial jobless claims for last week. Also a read on manufacturing and services and existing home sales. And then we ended off on Friday, new home sales. And of course, yes, words from Fed Chair Jay Powell at the Fed's Jackson Hole Economic Symposium this week. That is your Bloomberg Business Flash. Paul and Alex.
All right, thank you very much, Lisa Mateo. We appreciate that. Alex Steele, Paul Sweeney live here in our Bloomberg Interactive Broker Studio in New York City. We're also streaming live on YouTube, so head over to youtube.com and search Bloomberg Podcast, and that's where you'll find us. Eli Lilly, stock's hitting an up 4% today, all-time high. Stock's up like 58% year to date. Patients taking Eli Lilly's blockbuster weight loss shot were 94% less likely to develop diabetes in a 3-year study that illuminates the long-term health benefits of treating obesity. And Alex, you mentioned these are just like wonder drugs. I mean,
it definitely feels like they're all magical.
They're magical. They cure everything. So I need to figure out what's going on here. Sam Fazeli, he joins us. He's the Director of Research for Global Industries. He's a Senior Pharmaceutical Analyst. That's his day job for Bloomberg Intelligence. And believe it or not, he's actually at his desk in the London
He was in
studio.
Bordeaux on Friday. On the phone.
I was going to say, I expected him to be in some, dialing from some exotic locale in Europe somewhere, but he's actually working.
This is exotic. Look.
Yeah, exactly.
Well, the ceiling looks pretty cool.
All right. So, Sam, I mean, well, thank you for coming into work as opposed to your peers there, BI. Sam, talk to us about Eli Lilly, their drugs here, and obesity. These numbers just jump out at you, don't they?
They do. But let me take you back a little bit. Were we not always told, when we went to the doctor and we started, our glucose was going up, not you guys, obviously, you're all fascinatingly, amazingly healthy and fit. But those who weren't, and told, you need to lose some weight, my friend, because you're at risk of developing diabetes. So where is the shock? If you reduce weight and manage obesity, you lose all these, I've been repeating this thing, sleep apnea, risk of developing diabetes, everything that we're talking about here. You eat less, you lose weight, less risk of developing diabetes. So not exactly a shock. Nevertheless, it's great to see that it actually does what it says on the tin, that by reducing weight, you do manage all these side effects. But before we get too excited, I want to highlight one little wrinkle here. There's no wrinkle with the data. If you read the press release, and I've got it right up here on my terminal, Eli Lilly announced today positive top-line results from the SURMOUNT-1, a 3-year study, 176-week treatment period. Find me somebody who stayed in the real world on this drug for 176 weeks.
Yeah.
So
we survey physicians. What do we find? 40 weeks. I'm sure it's going to go up, but that's very different setting. So how much of a real world will this actually translate into in terms of preventing diabetes? Time will tell.
So you're not saying that the study was bogus. You're saying the study was real, but in reality, people don't stay that long on the drug. Therefore, the results won't be as magical for them.
Right. In clinical trials, you get the best possible data, basically, because it's highly controlled. People are followed. You make sure that they stay on. There would probably have been people who have dropped off here. So maybe the actual average treatment period wasn't exactly 176 weeks for everybody, because people do drop off. And I'm assuming in this trial, the data they're reporting to us is what's called intent to treat, i.e. you've intended to treat that patient. Whatever happens to them, you still count them, even if they've fallen off the drug. Nevertheless, we need to see the detail. But in a trial setting, things always look better than in real world. So here we have to remember, average stay time according to our surveys that Mike Shaw, my colleague, runs every 6 months, it's about 40 weeks, similar to what we get for Wegovy. And even the press release, they say as soon as they came off, weight went back up and the risk started going up again of developing diabetes. Oh. So this is not something that you've cleaned it all up. I can stop now at 176 and I'm done. It's the same story over again.
Right, exactly. So, I mean, so I look at the stock for Eli Lilly, Sam. I see it's up 64% year to date, all-time high. How much of this stock performance is these GLPs?
Oh gosh, if you look at the chart and look at the flow of information and news and the upgrades, etc., that are coming to every quarterly result, etc., to sales, I would say a meaningful chunk of this. I can't quantify it exactly because this is a company that's got other stuff going on, Alzheimer's disease, oncology, skin diseases, etc. So this is not a one-trick pony, but a large amount of this story. And you can tell by when somebody reports a positive result in a competitor setting, these stocks sell off 4 or 5%, right? If you remember the days with Roche, only 3 or 4 weeks ago, I think, right? Yep. So, and let's not forget, in a few weeks' time, we have the European Association for the Study of Diabetes. Roche's data is coming out. Somebody's going to be up 3 or 4% that day, and somebody's going to be down 3 or 4%. Who it is, we'll see what the data says.
So the point that you made that if people come off it and they gain the weight back, so in that sense, it's not like everlastingly magical. Will there be iterations, though, where that won't be the case?
There's 2 ways of dealing with this. So you go on the drug, you come off the drug, you go back on the drug, you come off the drug, and you just do your cycling. Every few, after you've got to a point where you think, I don't know why people come off the drug necessarily on an average. Side effect tends to get a lot better over time. And maybe it's cost. Maybe it's because they're fed up taking an injection every week. So if you put all those things together, as they get cheaper and injections become once a month maybe, or they become oral for the maintenance phase of the dose, and that oral doesn't make you feel ill every time you take it in terms of gastrointestinal, maybe that's the future. Maybe there are other modalities. Amylin is one that Novo Nordisk and Zealand Pharma are developing as a target. That seems to have less side effect issues. Maybe you can maintain your weight loss by those drugs which don't have the same side effect issue. So that has to be the way that you see it, but nobody ever complies with the drug forever.
Right. When do the pharmaceutical companies, Sam, have a timetable for when they will have a pill format as opposed to an injection?
Yeah, so they're all trying to develop them. There are a couple of companies, Roche and AstraZeneca, which have got what we would call traditional, potentially small molecules that comes in a pill. So it's not the same biologic that you're currently seeing. The folks who are developing these same GLP-1, GIPs, etc., are also trying to formulate them so that they can be taken orally. The trick there is, if it starts releasing in the stomach, you need to take them on an empty stomach so that you get absorption. If you take them on a full stomach, then you have a problem. So that becomes a bit of a headache for somebody who gets up in the morning, decides to eat or not eat, and then they also get side effects. So I would say 3 or 4 years. There is already a diabetes version, Rybelsus, on the market as an oral. But let's say 3 or 4 years.
What about heart disease? Does it actually cure heart or reduce death, I should say, and heart disease? Do we know yet?
Yeah, we know that already. We do that. We know that already from the cardiovascular outcomes trials, the CVOTs that they've done. At least for Novo, I'd be very shocked if Lilly doesn't get the same result.
So for those on YouTube, there is literally no one.
I saw 2 people.
2 people in Sam's floor.
Guys, it's 3:30 here. It's tea time. We're in England.
It's tea time.
They're all up there having their tea.
I'm on TV at 3:30 in the afternoon, man. Paul's on the beach at that. Yeah, you're on the beach at that point. Okay, so hold up.
Exactly.
There you go.
All right. Hey, Sam.
If I turn my camera that way, you'll see a lot more people.
Okay. We got like 30 seconds left here. What's the exciting thing that you and your team are working on in terms of, what some of these treatments are out there that people need to be paying attention to?
Yeah, in general, you mean, or obesity, diabetes? General. Okay, so we've got three conferences coming up that we're all excited by. As I said, the European Diabetes Conference. So there, Roche will get that data, and we'll get some cuts of other data. That will be an interesting one to look out for. ESMO, European Oncology Conference. New data coming out, some press releases today for potentially surprising data. And then the World Lung Conference, where we have some new modalities being presented. All of them will have something funky going on. And for the cancer ones, we have a webinar coming up, hopefully for our clients.
Very good. Sam Fazeli, thank you so much. As always, Director of Research for Global Industries. I'm not sure what that means. He should just be head of European research when I was part of this thing, but they've changed it all up here. Most importantly, he's one of the top pharmaceutical and biotech analysts in the city of London, and we got him at Bloomberg Intelligence.
And Bordeaux, France.
And Bordeaux, France, exactly. Yeah, I mean, you know, again, I'm waiting for the invite for us to go over there and
I got a picture.
Sample some wine. You got pictures?
Yeah, I got a picture from Friday. But,
okay.
You know, it's an old pic, but still, it was something.
Yeah, he's got like a horse farm there or something. I don't know.
Whatever. Sam's just really cool, okay?
Yes.
And we just totally love him.
Yeah.
All right, coming up, Dryden Pence is CIO at Pence Wealth Management. He'll be joining us with his take on the market. I appreciate we're not going anywhere right now, but will we go somewhere in the future? Is all that selling done? And if it is, are we seeing the CTAs, the volatility controlled funds, are they going to come back in the market? And then we get back into the FOMO whiplash to the upside kind of scenario, and how long can that last for? Particularly